Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and we are live. Oh, hang on a second. Doesn't look like we've got a video capture here. Let me just see what's going on. There we go. There we go. Good morning. Welcome, 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 everybody. Welcome. Our new guy, Sapata. Sapata's new to our channel this morning. Welcome, welcome. Let's get started, shall we? All right. Well, this is oil. Look at these equal lows sitting down here. So oil looks like it's on a little run. I do like this upside 75.17 as a potential upside. We'll see if it makes it there on a wick. And then I'd like to see a retap of this here. Order block open here. It's imbalance. And then start moving higher. We got to get through that level though. Okay, let's start off at NQ, shall we? Yesterday when I was kind of doing my Sunday review, kind of mapped out all these levels. I was thinking it'd be nice to see them reach for, and I literally gapped down to the bottom one, and now we're starting to work off the top of it. So what have I got for you today? See how we worked this whole discount array? We went all the way up to the premium, created a premium high, all the way down to discount, through it, tapped a deeper discount. This one is a deeper one. This should be blue. Tap the discount, the deeper discount one. Ran all the way back up to the premium one again. Came all the way back down to the discount one in here, but not this one. There's so many sitting in here. You got to take your fib tool from high to low here. Start looking on lower time frames for these wicky kind of days like this. I'm not going to really engage too highly on this one. So anything above this Friday's high, and so far Sunday or today's low, I guess it was Sunday's low, 50% of that puts us right in this guy here. So depending on the direction we're heading into, I'm looking at this for next price leg down. If we decide to come back down, right into the mean threshold of this candle. It's a hard one to call on a daily chart today, so let's go down to a, I'll leave that one there for now. I'll just go premium discount. We'll see what kind of things we end up in there with. Let's look at a 1 hour chart. Let's do 4. Okay, so 4 hour chart brings us into go out above, come back in. So I still like to see this go higher, heading for that 50%. So 460, 450, 56, right around that equilibrium or of that range is what I'm more interested in here right now. And then into this gap. That puts us right at 21,518 if you want to just come up above that. 21,518. I'll put some of these lines in here. I'll just do this. I joined a Hispanic Bitcoin Facebook page the other day, and I was posting all these Bitcoin trades for people, and they have to send it, they have to go through the administrator, and they take such a long time. They missed out on a ton of trades. I gave them these bomber trades. I'll show you when we get to Bitcoin. I'm like, you got to start posting these sooner, otherwise your people are not going to get the benefit of this if you want to trade Bitcoin. But anyway, it's kind of funny because I gave them some killer trades this week. Yesterday was just like crazy. Let's go to so I'm looking at higher inside this range, obviously. I like this here. I like the mean threshold. If we can hold this, I'd like to see this little piece stay open here now. So on the 1 minute chart, there's a little tiny piece here back at equilibrium, but or the consequent encroachment of that. So on the 1 minute chart, you want to see this go from premium to discount. And then from discount, you want to see it run all the way back up to premium again. Inside this range, you want to see that one back there hold. And so that's that. Let's look at, oh, that was the 1 hour. What do you see in the 1 hour? Let's look at, this be the 1 minute. That was the 1 hour. There's a little tiny imbalance down there. So upside, this is just small range. You're right near the equilibrium of the range, so I've got nothing on the 1 minute chart just yet. So we'll see what it endeavors to do. Our new week opening gap is huge this morning, and we're just right back to the open of it. So that 518 level would be almost a full refill of this. So at least the consequent encroachment of that will bring us up to this new day opening gap around 21,384. So keep that in mind. Let's look at ES now. I've got to go through these real quick. Similar problem with ES. We're just below that opening. So NQ is higher. This one's just slightly lower. You're inside this range. 5962. I don't want to see it get below 5962 or 5975. Dow Jones, look at that. Didn't quite give us that upside popper there. Didn't even give you the last little piece of that. Rejected, went right through the mean threshold. See how it froze on that and then gapped it down? So you're going to see everything's taken a... This is all because of this tariffs war that's starting now. It pissed us Canadians off. That's why we're cute. What is it? I saw this meme the other day where I probably mentioned this already, where Canada's war on tariffs, and then you see this picture of Florida covered in snow. Canada's retaliation for the tariffs, and then there's just a blanket of snow over Florida with throwing snowballs. Anyway, Oh. All right. Good morning, Hans, Hadi, JDM, Russell, and Craig. Early birds this morning. Welcome, welcome. Hope you guys had a good weekend. So where are we looking? Is like this bit of range here. %62%, 70%, 75. Well, %70 puts us as a fill here. That'd be an optimum trade entry reversal, takes out these lows already, and then we start to get a retracement. So 70% optimum trade entry reversal inside the second leg here gives us a fill of this and brings us back into this discount SIBI. So we'll see how that acts around the 70% range. Natural gas. Oh, look at the pre-market's way up there today. Let's look. That's 10% higher than it is right now. Almost. Yeah, pretty close to 10% jump just this morning. Copper on the move. We can get a retracement into copper. If this, we'll see where this candle ends today. That'll determine whether or not you can get in on the top of this here and go higher, or if copper just rips and takes off today. Ignore this stuff. I'm not telling you guys to buy here. This is just a reference for me. So I should put this in here because I'm not here to give you advice on buying and selling of anything. So that's just that was a note for me to look at. Equal lows. I think we've taken those equal lows. Nope. We have equal lows and we have the breaker down here. Retap this breaker before going higher. The fact that we've ran this level out and we've traded back into it. So we go higher here and we just come up to 3.484 natural gas. You'd want to see it close above this level here. Yeah, you have to start getting right back up into this range, get through these two candles and start marching higher. It's got to take up a huge part of that range first. We could just see a simple retracement back into this level and then roll over and come back down again. Gold we'll get to in a sec. ATNC's faffing around still. Goliath. Got itchy nose this morning. Wheat. Still looking for wheat to take out these highs here. We've retraced back into this level here. We could still come down deeper. I want to see this portion stay open. That last little piece there, I want to see it stay open and start marching back through this mean threshold here. Yeah, I want to see that if we start to retrace back down into this, it loses its love for me to go higher. All the time we start to fill in this fair value gap. If it stays open and we continue to march up higher, I like that. And we'll see how today ends. That's why Monday seems to be an important day. Michael uses it as an important day to decide where he thinks the market's going to go for the rest of the week. I now see why. Sugar never got above that level we were looking for. I want to see a decent body get above that and then let's push that higher. Oh, my nose is itchy. You want to see it get above that. Use that for support to push higher. I want to see these two candles get taken. Otherwise, we got to roll back into this range again, keeping our eye on these two lines we have down here. Coffee. This is it. That's it. That's all I want to see right there is a run back to this old high. Again, it's got to close above. Pull back into this range, get past consequent encroachment, I think, and then we'll see if that wants to march higher. Right now, I've got nothing in the hourly, even in coffee right now. If we get below this level in this hour and close below it, come back up and use this level to go lower, then you're looking for that line to there. Inside those lines. Cocoa. If you're into cocoa, got nothing for you in cocoa. This has got a whole price here now. It's going to march up through this level. Otherwise, I got nothing for you. Coins through the mean threshold of this. We're starting to get below that level now. So we've already ran the reversal, breaking market structure. So if we close below this today, look for these two candles as support and that level there. You want to see a portion of this SIBI here stay open now. Let's start going lower in corn. Little piggies, you want to see them. They've hit last week's objective, which is great. So I want to see it get above here this week. I start reaching for the highs, and then we can do pull some fibs there to see if it doesn't a direction. If not, and that rolls back into where it just did. Yeah, I want to see that go higher. If it rolls into 82, so the next thing is the downside. I wouldn't want to see it get below there. You want to see that last little guy stay open. That's a mean threshold of this candle here. Would be a fill of that. So give that as a potential wiggle room. Losing that gives you another run back below these lows here. See, we wanted oil to reach for these little suckers down here. Look at that reversal right there. Did you guys catch that? Please tell me someone caught that oil reversal here. And this, you're looking for this right here. First one here. Look for a range extension and then take out these lows. Tell me one of you guys got that. I was mentioning that just before we went over to the beginning of the chart here. So is it starting to break up there? You're always looking for this. As soon as you see that right there, you can't ask for a perfect entry right there. 74.52 for a short. Right on the money. Zero drawdown. And you're already in like delicious money right now. Oh, we're starting the week off well, folks. We're starting the week off well. What? Oh, tell me someone caught that. Did anyone catch that? Craig, did you catch that? You're an oil guy. No one's in charge of Canada. We got a freaking snowboard instructor in charge of Canada and a former drama teacher that never really taught drama. No, you didn't see it. Only long side crude. Ugh. Okay, well, the long side's coming. So look at that spot right there. Deliciousville, Candyland. Yummy, yummy oil. I don't know if that's the right phrase for oil. Yummy, yummy oil. Yummy, yummy canola oil. Anyway, crude oil, not so yummy, but look at this. Equal lows. That's the downside objective I'd be aiming for there. How delish is that? Anyway, and then look for a reversal. And look at all this. There's cheddar. Nothing but cheddar in here. What a perfect entry. Crap. That was still sitting on there. I would have took that sucker right there. You couldn't have asked for a more perfect example of what we talk about every morning. Every freaking morning. And 20 of you were in here to see it. 20 of you. Anyway, let's move on. Look at this delicious gold. Everything's delicious. Perhaps I haven't had breakfast yet. Everything's delicious right now. My coffee's delicious. All right. 5-minute chart. So here's your upside objectives for, it's a 5-minute. We'll call it whatever. We just won't make it that color. We'll call it 1 minute. Inside this huge range, we have discount, run above it, come back inside it, run higher to premium, box to box. There's boxing for you, folks. All up inside that range. Your stop loss would be sitting here. You trade, comes back inside it again, and just keeps working it. Gets through this small range here, back to the premium. See how we closed above the premium? You go, great. Now you just want to see this whole price to go higher. It goes, boop, right back to it perfectly. There's no premium in here. This is not, for me, it's not a premium. So you look over here. Hits that, comes back down inside this range, 50%. You pull your fib tool from here to here, you'll find that's 50%. Let's do it. Enough of this shenanigans. Let's just do it and I'll show you. From there to there, pulls back below 50%, makes a little run back up, takes out the high, comes all the way back into, let's pull this one too. 50%. Fib tool is awesome. Do you know how to use it? Oh, sorry. 50% right there. So we just drop below that 50 into the discount portion. And off you go. Clear out the premium array right there. Closes above it. You guys got to see this, man. It's a rinse and repeat strategy over and over again. Watch. See how we traded above it? Come back, give it a tap, and then you continue higher. I'm telling you, this is gold. Price action reading. Yeah, Trudeau's done. He's done. His party wants to get rid of him. Anyway, here's the levels I gave them on the weekend. And they gave my discount box here on Friday, and then this continuation, I gave them all these price levels. That was the first objective. It nailed it. Then drove down all these other objectives. I put them on there. Gave them all the prices to look for. And the guy still hasn't posted the administrator still hasn't posted it. I was like, you know, if you're not posting these quick enough, your group here is not getting the benefits of this. And if all you do is trying to sell people Bitcoin instead of trade Bitcoin, then you don't need me here. They invited me to be there, but maybe he's just trying to fill his numbers. Either way, if he doesn't see the legitimacy of some of these, I understand they're probably going to go, yeah, it's a couple of lucky days, but I'm going to give you these price points that are just like bang on the money. Anyway, whatever. Whatever. Do your thing, man. So now I like to see, let me get rid of all this shit. Get rid of these things here. So that was the upside objective I was giving him next, and it's hit the upside objective. Now we've rolled above it. I like that. So, and see how we've rolled below it, and this is the wiggle room. So I don't want to see this. Ideally you want to see that act as a breakaway gap and then start moving higher, but it didn't. It's popped below it, so you've got need thresholds left, and after that lower. So that just that little pop up above you, that's the make or break whether or not we come deeper into the range. We're probably already over 50% of that range. If you pull from here or here, I'm going to take from up here. That one looks more feasible to me. They're just above 50%. You hit 62. So inside the small little range here, there's a small swing high here. I don't classify that as a real swing. So this is the swing. So we need to get above this level and then start going higher and use it for support. Right there. Otherwise, if we lose, we're already on the downside of this. And yeah, and we traded back inside it already perfectly. You see that? How we dropped below it? We've closed just below it here, and then we opened, went lower, came back up right inside that level, dropped down, closed below it. Now we're looking for this to keep coming lower. So I'm looking for price to drop down lower. So until we get back up through here, I'm in for this lower. I'm not in it, but you know, that's my thoughts. We got 2 more minutes to rip through these. That's a weekly. You guys see the Grammy Awards last night? My wife loves the Grammy Awards. What's with that Jaden kid wearing a house on his head? Nothing screams, I want some attention, like wearing a house on your head. Fill that fair value gap there in Payto exploration. So I want to see if this holds price here now and starts to reverse, or if we reach for taking out these lows in this deeper discount array down here. Disney, what's going on with Disney here? So here's my thoughts. Yesterday I started putting this up on, if you check on our channel there, you'll see that I put on the on the channel, I put the Disney, what I liked about Disney. It's in our stock picks section. So Craig, I want to see how we've taken this high, created this gap. We've traded through the gap here on a close, traded back inside the constant encroachment of the gap, and traded lower. So for me, you got to stay above this go no go zone right here. So you can retrace all the way back down into here. I'm all right with that. But the moment you have a body freeze below here, that puts this whole range as a significant, this little range here makes it significant. Oh, so you've already opened below it. I didn't even see the pre-market. You've opened way below it. So now using this candle, all this in here as support, there's you're already through your no-go zone. So we're coming back into this range here now. Wow, I didn't see the pre-market there, but yeah, it gapped right down below that. So you have got a long way to go to get back into a bullish run again. Otherwise, pull 50% of this range. Looking for old highs first. There's lots of liquidity voids down here that you can reach for. So watch to see if you trade back into this order block or the no-go zone, and then roll over and come back down. You're not even at 50% of that range yet. So if it just taps this sell side liquidity, watch how sensitive it is in there and see if it starts to come back down again. But keep your eye on the 50%. And then after 50, you've got little gaps down here to reach for. So unless you're buying this at a discount again to go more. Right now, I'm not bullish on Disney, obviously. I'll leave that there so you can see that later. GEV. Well, that's gapped down as well. I think everything's going to take a tumble in the market today after this whole tariff trade war shit's going on. So be real careful about putting money in the markets unless you want to catch a nice little discount. United Airlines, everything's gapping down. ING, multiple sectors, and they're all gapping down. Even the bank's just taking a major drop here. Is that today? Nope, not yet. Oh, it's the 31st, so we'll see if they got the news of the trade, the tariffs before everybody else, the banks, and this is all like we're losing, we're rolling over here. So let's see if this tariff war starts to really affect it. The banking industry as well. Micros, look at that gap down. Wow. ICAD. It's a small gap down, 10%. $122.44. This just rolled over and pooped the bed. See how we traded below that level on the this thing here. You want to see this hold price or trade above? It traded above. You're like, good, that's exciting. Then all of a sudden it closed. You think, great. The next one you want to see it leave, and then it just dropped. Then you see it drop below. You're like, oh, now we're on the wrong side of it. You just paid some new information to go lower. So opened, went lower, opened, just tapped back into that gap, and then ran back deeper into this range. So running back into the range, this immediate rebalance is our downside objective here, and this little imbalance right there. So deeper inside that range now, you want to see, I like this little snap off of here. I'd like to have seen that. Yeah, it's still making them down again. It's got to get above here yet for me to even be remotely bullish it and pound it again. It's crashed everybody. Everybody's responding to this little tariff war here. Euro dollar's taking a dive. It came back to this old high, snapped off. Canadian dollars dropping. No kidding. Japanese yen is the only thing so far that's holding price. It's not really dropping. No trade war with those guys, I guess. We're still inside the premium of the silver. I would imagine all of these are going to take a nice little drop now. Remember I told you February is a drop month? Why in February does he announce the old tariffs? All this coincidence, huh? Anyway, let's get back over here. I want to see what oil did. Oh, Did you catch this? Oh, please tell me somebody caught this delicious oil run this morning. Look at that run on that liquidity. Jeepers. If you were in there and it just kept running, you just hold it and just move your stop loss, just chase it down and say, just, I want to be above here now. And that opens and goes here and keeps coming lower. I just be like, slam, slam. I'd be bringing up each one of those candles till it finally see the reversal right here, trade above it, comes back inside it, all the way back down to the very bottom of it here. And now you're looking for it to come back higher. Look at that right off there. How wonderful. Not as precise as this one was. Like, look at that entry. 74.52. What a perfect entry. That's a whole dollar. Oh, well, I missed it. That's why you don't get upset. You go, oh, well, whatever. No position is still a position because you win. You win by not losing. You just got to reframe that. You can't beat yourself up on the fact you're missing. You just go, how exciting is that? How beautiful setup is that? What an awesome exit that was to look for those lows. Oh. So anyway, get excited, man. Look, you can see how there's a trade setup that worked so deliciously. You get excited about that kind of stuff. Don't turn that into a negative. You just go, oh man, I love it when it works. I love it. Chopsville. Anyway, let's say hello to everybody this morning. How about Disney this AM? Good for you, Craig, Russell, Craig, and Disney. Get it. Craig and Disney. Craig and Dis. Sorry, I don't get it. Yeah, I just rewatched his karate movie last night. I'm totally missing this whole thing. Craig and Diz. Anonymous. Good morning, good morning, good morning. Hi, Darren. There's a difference of 80 points on the Sunday Open. If we look at the NQ and MNQ, which one do we use? Well, I'm sticking with the micro right now. I'm trading on a micro, so I'm going to stick with the micro. Oh. Let her buck, man. Don't get upset if you're not in this. Just let her ride. Here's a nice little reverse here. Taking out lows. Trade through them. Oh, no, this one would have taken out your stop loss. See that right there? Right at 9:30. Came back. Took that one out. Came back inside it. Hit it perfectly here. Ran higher. Came back one more time. Hit this order block. Ran higher. Reverse. Look at these. Every time you take out an old high. Old highs. Inside a gap. Pull your fib tool from high to low, divide that into quarters, and keep an eye on the quarter level. From here to here, there's 25% right there. It's right on that level. So let's see if this reverses in here, aiming for down here, and these equal lows below us. I'd like to see 9:30 or 10 o'clock takeout 930's low, or create a high at 366. See if that holds. Oil took out Asian it's for reversal. Yeah, I'm telling you that I might actually just focus on some oil trades today. That's the kind of clean entry you want. It hits it and bang, just leaves. That may be the stubborn side of you that wants to hold on to that trade. Like seriously, you want to see that really tear straight down to your objectives. Like that's all sell side. There's no buy side in there at all. Except these little wicks, but look for 50% of this range here. Look at that turn right on a Tibbs. 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 Look at that. Oh, deliciousness. And even on a Tibbs, it came back and give you your entry. And keeps on trucking. 16 hits your array that you're looking for. See how it goes 16, 17, 18. They keep going in the same direction. Each one makes a new low, 18, 19, 20, 21, still makes a little pop, and then keep coming back down again. Like they're all still heading in that direction. They either make a low or they continue a direction. 27, 30, 32. Crazy Ivan. Now, does Crazy Ivan see you? Traded above you here. You want to see it, this whole level now start to go higher. Crazy Ivan sees you, takes you out, and now you want to see it run higher. And your stop loss has to go back down here below this level. Good morning, Derek. Good morning. Good morning. Shepard. Good morning. I haven't seen Shepard for a while. I'm rooting for Craig. That's all. I want Craig's Disney to rip up there. See how it just bounced off this level here? Inside our little go, no go zone. You want to see it march through that. Look at this level here. I do like oil. We're running back deep into this level here. See if it trades Oh, it's already popping into that. I want to see it leave from here now. Nope. So we trade below it. Not going higher. See how it get through this level right here. That's the level you want to see it trade back into. You want to see a portion of that stay open. It doesn't. It comes in here, takes out the low. So look for these lows to extend now. Well, if that's coming back down, look for the mean threshold, 72.83. That would have been nice to see that hold there. 72.83. NQ, you've just hit this discount array here. We'll see how we hit. See if we get a reaction off of here. Chris, way to go. You're trading micros. Yeah, good for you, man. Stay frosty. In this kind of environment, you can get beat up pretty quick. Like that oil trade right there, just alone. You pay for new information. We're on the wrong side of it here. You're coming deeper into the range. Then you're really on the wrong side of it when you notice you've dropped below here. You close your trade out before your stop gets taken, unless your stop was closer. So you always have to look at the potential for the market to turn. And don't forget, you're still in the 930 range. So 10 o'clock takes out a low. You may see that still get accomplished, but you got to wait for after 10 o'clock silver bullet now. That's the risk you take trading in a 930 till 10 o'clock range. Morning, Theta. What your take on NQ today? You probably already said. Sorry, I missed it already. Watch out, he's boxing. Question about oil long. Would you want to wait for a break 73.78 before long? It's better confirmation. I like a break above here. Yeah, if you really want to, this would be a cam 3 setting up here. Now you got a cam 1, 2 in here and a cam 3 with this leg displacement. 10 o'clock. I really like to see 10 o'clock make that little 9-10 turn. So there's the 9 turn. I like to see a 10 turn here, break this structure to the upside, and then I'd like to see it run back into this range here and run up for this buy side liquidity up here. But you got to get out of this small range here, right? And what is in this small range? So when you look at this, Russell, and you say to yourself, I don't see a BISI on this side. I see an immediate rebalance here, but that is still sitting inside this one right here. So on a premium level, if this was the low, you want to be above 50. So anywhere in here would be a premium level. It looks like we're extending the range lower anyway. So wait for 10 o'clock, wait for a silver bullet. And if you can get above, this creates a SIBI here with a reverse. And then we climb above this order block. Then I'd like to use this one to aim for this premium level and see if we can get through that to continue going higher. So these would be like confirmation levels, your finger holds in the rocks, as it were. So we got another 7 minutes to see the fair value gap forming in here. And then a reverse, then a nice good displacement candle going higher. That's ideally what I'd like to see. Ten o'clock is cleaning up all those lows below us on the 1 minute chart. For a second there, I was looking at oil. It's a very similar chart. This little piece here. $72.88. See how that acts. It's a small fair value gap here. There's a small one here. That's what we're looking for. So now we just see if this mean threshold here holds price on the higher time frame, 72.88. So that'll be around here. We've got a TIBS 55.58. We got 00 and 2. What did gold do? Did gold say goodbye? Goodbye. Man, that's a nice little run. Look at that. Tore right through that level. Tap, and then just rip through it and said, we're not even going to give you a chance to get on. If you haven't got on the bus a long while, we're just shifting into turbo mode. And off she goes. Oh, delish. That means the American dollar must be going down. Is that how it works? US dollar. That's US CAD. That's US dollar. Nope. Now we have gold and dollar moving up. Let's see that get right up into here now. This is boxing. This small one up there, you can take it all the way up to there. Mean thresholds, you want to see that whole price? Just want to see this start climbing out of here now. Good morning, Paulette, my dear. How are you doing? It's good to see you this morning. I hope all is well with you. Nope, 10 o'clock now. It run the lows. It's taking all these lows here now. On my chart, it hasn't taken it yet. Interesting. Am I in the right one? Yeah, 1 minute. My chart puts it right here. Hasn't taken it out yet. I'm very good, thank you. I'm so glad you are on this morning. I've been learning so much. I'm glad you're learning something, Paulette. Makes me happy. I have a quick question. You have mentioned box-to-box trading. Is that internal liquidity to external liquidity? No, box-to-box is just trading internal range liquidity. Like box-to-box, that would be internal range liquidity only. When you here's the real quick down and dirty secret of internal to external range liquidity. If you see a run from one box, let's say we come back into this box and you see it trade below it, look for a range extension. It'll take out whatever range that little guy is sitting in. It should take it out. Most of the time it should take it out. If you trade back through it, you want to see it run from box to box or order block. If the order block has not been hit, look for a run from order block or box. If the order block's already been hit, look for box to box. So that's internal range liquidity. You go from that level to that level, provided this one doesn't get taken out. Now we've got a new range. So you look for any type of swing here and look for a run back up to box, this box here. So if you see a fair value gap forming in here and we start to trade back up and into it, and you want to see it break through that range because that's your breaker. You want to see that take that breaker out and then start running for the box above you. It's not always a straight run, except in oil like this morning. That was a box to box right here. So if you're boxing and you went from that entrance there, internal range liquidity, to run all the way down to there, and you see it hit it right there, and you say, I'm out from there to there. And if I see it extend beyond this, I'm expecting the range to extend. Well, usually you'd want to see a little bot below this, come back, tap this level, use this as a support level and this order block. So it taps it would tap the level and then just keep extending. This one didn't, it just kept running all the way down. So that's internal range liquidity is what you're looking for there, Paulette. That's what boxing is. Meetings. Greetings from Sweden. Welcome, 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 Mats. What qualifies as box? Fair value gap and order block? Just the fair value gap. Just the inversion. This will be a fair value gap here. If we can get above this, that'll be inside this range. That'll be a discount box. And a premium box will be right up here. Well, there's your first premium box, which is the gap. And the next one's above it. It's right here. So you use this one. Right here. As soon as you get above it, use that order. It's got a break structure. So you want to see it get above that. Nice displacement candle. Come back, tap the top of this or inside this order block. The bottom of that order block, these three candles will give you a full fill of that fair value gap. The strength comes from how much of that gap stays open. If this is a nice displacement candle up now, you want to see that displace up. And then come back down into this, find some support inside this order block and inside this fair value gap. And then you want to see it continue marching higher. Inside this range, your next box to box would be right here, because there's a swing point here. So you got to take your box like this and mark them out. That's your premium box inside that run. See how we didn't break that high? You want to see whether or not just see this one. You wouldn't take the trade in here anyway, because you have not broken above it and come back into it yet. So you just sit and wait. It's 10 o'clock now. So you're waiting for a silver bullet to happen. Good morning, Ollie. Oh, you were looking for a unicorn trade. So reverse, accumulation, distribution, accumulation, second stage distribution. You want to see that, like, book it all the way down. I see what you're saying, Mr. J3. Was it J3? How's the back? It's pretty good. I'm walking around. I still get some jabbers. The morning it's really tight and I can feel some uncomfortable little tightness back there. It's like a dull, sharp, dull, sharp, dull. It's an intense, dull pain right now. Because I just got up, had a shower, came down here, and sat, and I'm sitting for 3 hours. It's probably not a smart thing to do. But you guys don't want to hear me whining about my back. And I managed to get this thing to go up. So when I need to stand up, checked out. I was looking underneath there and seeing how high I could go on my desk before the cables started getting stretched. So we'll see how high we can get this thing. Okay. A silver bullet. After 10 o'clock or at 10 o'clock, you wait for a first fair value gap to form, price to trade through it, come back and tap it. That's your silver bullet. The basic Michael way of looking at a silver bullet is that's his silver bullet is after 10 o'clock. Look for a fair value gap to form here. So there's a small one right here. If you trade back up through it and come back down, tap it, that's when you're looking for a silver bullet. So you got one here to tap back onto. You've got one right here. So there's the tap right here, and it's right on a and you're right inside that guy there too. So you want to see if this 9-10 turn here holds and goes higher. It's 58. Nope, drop down below it. So much for a silver bullet. So look at this level here now. $11, See that close below that level? It does. Come back, give this a little tap all the way up into here. This is the level. This is what I was talking to you about, Paulette. Looking for potential run all the way back up in there. Let me get this out of the way here. So you want to see it tap this. Strong if it taps that and leaves. All the way up to here. And this will give, I don't know if who it was that mentioned the unicorn trade. So if this was just a big unicorn trade, second level accumulation distribution, we should see it just rocket down now. If this is your idea of a unicorn. Have you tried an inversion table? No, I've never tried an inversion table. Don't even know what an inversion table is, to be honest with you. I've never heard ICT talk about inversion tables. That's why I don't know about it. My influence is entirely ICT. I did start getting on baby pips, trying to understand it, understand candles and dojis and stuff. And then I joined Michael's stuff. I was as green as it came, so I got to reframe my whole approach to learning this, because I came in as green as grass, so I didn't learn all that other stuff. I just stuck to ICT stuff. Good, take care of yourself. Thank you, Simone. Did you see it? Let's see the oh, I haven't marked it in there, my friend. Stand by. Shit. I hear you, Abs. I hear you, buddy. It's great. I didn't have it marked, so thanks, sorry. I see what you're saying, though. Oh, inversion table about the back. Oh, that. Yeah, I've got an inversion table downstairs. I haven't used it since my surgery, before my surgery, though. So, just because when I had my fusion done, you can't have any torquing loads. And then when I had my neck done 2 years ago, they said you do not want to be doing bungee jumping and all that kind of stuff. And I was so hoping for a bungee jump. But yeah, they said no tension on your neck. You have to let it heal. It's been over 2 years, and I still haven't got my inversion table out to play with. It's not really mine, it's Gary's. And you've seen Gary in here before. It's his table. And if you're watching Gary, if you want your inversion table back, you can take it anytime. I don't think he's got any room in his condo for it now. But you're welcome to have it back anytime, buddy. They do stretch your spine for sure. I like that taking a lacrosse ball and sticking it on the wall and just kind of go working that. I do believe in rolling and massage. Sometimes you just got to put some acupressure, like some pressure on that spot, and get that muscle to release. Works great for hips. Just stick a ball or a tennis ball on a wall and lean into it till you find that knot, and then you just kind of bear the pain a little bit, ease off so it's bearable, and just push on it until that muscle finally lets go. And it can be I find that's the best relief. And rolling is amazing. This is not a trading table. Okay, that's what I don't know why. It's like inversion table. Never heard of it. Oh, you mean the inversion table? That's the kind of thing you meant. I thought you meant like a fair value gap inversion. I've never heard of a table. I'm thinking bars, charts, graphs. There's a table that does inversions. No, you meant the obvious inversion table. Ah, yes. No, I haven't used it. Very powerful trading mind. See, that's what happens when you're ADHD like me. You're just like hyper focused on something. It's like inversion tables. No, where's this inversion table you talk of? I don't see an inversion table. Do I need to make one? Can I? Is there a spot on here I can make a grid? That looks like a table up there. It happens, man. It's ADHD people. It's such a gift to be hyper focused sometimes. Oh, you know what, Peter? I have one of those I bought all the little gimmicks. I've tried everything with my back. I even bought one of those things that you put the harness around your neck and you put it on the doorknob and you it's got like a long rubber band that pulls on your neck. Like I got one of those things and I just kept saying, "Don't come in here." Because I can just imagine the wife opening the door, whoosh, this thing snaps back and the carabiner KOs me or kills me because this thing's all stretched out across the room because I'm trying to stretch my neck out. And I just had this mental picture of this carabiner, this Darren lying in his coffin with this carabiner stuck at the top of his head, and my wife going, "Why didn't he tell me? Why didn't he tell me?" So yeah, I bought one of those stupid things on the internet. So I've got all of them. I just saw them just because the thing was the way it was situated. I thought if that damn thing lets go, or somebody opens the door and suddenly gives you a torque, or you're blocking the door, you're putting wedges under there or something. And I know there's lots of other things you could hook it to, but my point was that's a lot of tension. I remember being in paramedic school, we were in gym class, and they've got this thing where a guy has a harness on and he's running and a guy's holding on to these I guess it's cords, but he's got a hold of a handle and the guy's trying to run and you're just kind of holding him back with these hard rubber bands, so he's got constant tension on him as he's running. And this thing let go and it came back and hit this guy, one of our students, in the chest. We thought, and there was nothing worse than having a whole classroom full of paramedics. Everybody wants to dive on you and treat you. And oh man, he got hit rock so hard in the chest with this carabiner. Like it's like somebody shot him. He was in so much pain. So much pain. So that's all I could think about was, so anyway, my point is I've got all those little fancy gears for your neck. And it does. Decompressing your spine is really good for it. But after surgery, you got to be real careful about when you start reefing on your spine while you're trying to allow bone to heal. Because when you get a fusion, they clean out all the discs in between the two bones. They put a basket in there full of crushed bone. And that crushed bone turns into a solid piece of bone in between the bones. So your spine has that. Then they stick the two rods in there, or two screws in there on each side, and then put the rods in the middle to hold it while that basket of bone heals. It heals up. So anyway, that's so you don't want to be pulling on it while it's trying to heal. That basket is about somebody said it's about $4,000, $5,000 for that little tiny mesh basket they stick inside your spine. Anyway, I'm sure you guys don't want to hear about gross back surgeries. You can come in here for surgeries, but anyway. Yeah, I've got pull out Microsoft Excel for my my table. Okay, so what trade here? No unicorn for you. Look for the premium box. I tried one. My wife can pull me by my head, help release my neck. Oh my God. My ex-wife would have pulled my head off. She would have attached it to the car and said, how fast you want me to go? I didn't have an ex-wife, my ex-girlfriend. I have a real one the doctor prescribed. That is way better. Yeah, I bet. Yeah, I bought this stupid one off the internet, so you could bet it wasn't custom made for sure. And when I first got it, the plastic in it, it was, you know, that old cheap plastic you have with a little bit of foam inside that says, welcome to China. You can hear all this, or made in China, you can almost hear the Chinese just going, you know, I wonder how many of these people we can take out with this device. It probably should have just put on it, don't actually use this device. It's so cheaply made. Yeah, they had no double stitching, no nothing. And the carabiner was like, you could take it and twist it and bend it. Yeah, I wouldn't know. Oh, look at this. Nice little reverse. Look at that 366. How many of you are sitting here now going, I missed this, I missed this? There's nothing to miss, really. Right there is the only thing I can see here. You've traded above this thing. When we trade above that on a close, which we haven't, we just got a wick up there so far. So there's nothing that gives you an absolutely clean entry other than this one right here. So how you trade through this, you take out this one, you trade back into it, your long is right there. And I don't know if, did you catch that one, Hadi? I don't know if Hadi caught that one or not, but that's the quick reverse right there. And it's at 10:21. Question. Michael seems to qualify initial presentation for value gap somewhat inconsistently. Sometimes he ignores the smaller one and chooses the one that has more displacement and took liquidity. That's his personal preference. We just stick with the very first one that forms. Because 9 times out of 10, that's the significant one anyway. And don't forget, there's some people that use it here. Here's a 15-second one. Look at the difference with a 15-second one. Goes above it, comes back, finds support at it, and leaves. So you can, there's a 5-minute one. I'm a firm believer in if it's fractal, right there's your 5-minute one. You trade below it, you come back, hit the consequent encroachment of it, you keep going. If somebody gives you a technique, a way of reading the market, ask them, is it fractal? Can you use it on all time frames, all asset classes, everything? If it's not, it's just a gimmick as far as I'm concerned. That's just me. I know it's a kind of a harsh thing to say to all the people out there that actually have their own little method of trading. This works perfectly on a 5-minute chart, doesn't work on a 10 or a 15 or whatever. If you don't have something that you can use on every time frame, it's not fractal. And Michael's 1 minute thing works on a 15-second chart, a 1 minute chart. Here's a 15-minute chart. There isn't one on a 15-minute chart right now. So you'd have to wait. That 5-minute chart. There's your 5-minute one for the lower. Take the lows out. Now you're going above. You don't get to come back into this. You rip right through it. If you do come back and tap it, look for some level of support there. And you want to see the rest of the stay open. Yeah, let's do a 30-second chart. What does it look like on a 30-second chart? Oops. Reverse that. At 9:30, when it first opened, right here, look at that. Came back, hit it, and left. Took the high. Worked it, worked it, worked it. Worked it again. Down, worked it again. Went through it, didn't quite tap it on the way up. So you can see every one of those levels, every time frame you're on. It's a fractal thing he's taught you. It is not specific to just 1 minute. At least I don't think so. I see the consistency across all time frames. That's why I believe it's a fractal piece of algorithmic trading he's giving you there. So I'm not worried about whether or not he takes a smaller one over a bigger one. Look at gold, you say? Oh, look at the reversal. Did you catch that, Russell? Russell, did you catch the reversal on gold? Look at that. Schmuck. Look at that. Perfect. You can't ask for a better trade. That's like that oil trade we looked at earlier. That's nice. Well, I hope you caught it. Good morning, sweetheart. How are you? Russell, you did not catch that gold run? Sorry to hear that, man. Back to oil, please. Is it trying to bottom? Well, what a 1 minute boom. Yes. Punch it. Huge reversal there. There's a huge. Come on. I got long 22 or 280 closed above the first presentation. That's me done for the day. Those 1 minute fast first presentations, leave them on a chart and see the function on it. Same first presentation of macro. Michael hasn't mentioned it, but leave them on the chart. No, wasn't watching. How do you got it? Fine, sweetheart. Thanks for asking. Starting to pierce into the mighty gap. Oh, deliciousness. Keep on running. Hadi's in this one? You're in this, Hadi? Look at gold. Oh, Hadi, I hope you're ripping on this one, buddy. I hope you're ripping on it. This is the same principle I'm teaching you guys every morning of these reversals. And if you catch your asset, that's why Michael tells you stick to one asset that you like and trade that one asset. Get really good at watching that one asset. But you can see this thing setting up on everything. That's why it's such a fractal thing. It's not a gimmick. It works on all time frames, all asset classes. Boxing works on everything. Everything. Trust me, it does. Well, don't trust me. Check it out yourself. You'll see it on Bitcoin. You'll see it on Bitcoin. You'll see it on some random freaking exploration company. Reverse, come back inside the reverse, go higher, trade below, come back in short, enter in this range, discount box here, box to box trading, reverse, trade above it, come back into it, go long, reverse, trade back, right here, trade back in it, you're already below 50%, so you wait. Here, you trade above it, you come back inside, mean threshold here, back inside that range, greater than 50%, back up to the old high. Wait for this to get taken on the downside. It does. You don't get a chance to get back in on it. It just continues down into the discount box here one more time. Reverse right here. You don't get a chance to get on it, so you wait for the next one right there. Trades above it. Gives you one opportunity to get long there. Take out the premium array box to box from here to here. You hit it perfectly there. Ran through it. Came back, tapped it, went higher, extended the range. I've told you that a million times. There's a reversal right here. Would have taken your stop loss. So you wait, get back in sync with the market. It takes out that low or a little swing point right there. Comes back up inside your, you got one here. Trades all the way back up to that first one. Trades lower inside this range. Premium, or sorry, your discount arrays are down here. It hits the edge of the discount array, comes back up inside this range to the order block, trades back down through that discount array right there, closes below it, extends the range. Well, a gap below it this morning. So that's in some exploration company way up in little old frozen Canada there. Disney does the same freaking thing. Here's your reversal, trades above it, comes back up inside it, and then you're Craig catching a monster run. And we talked about this when Craig was in this, saying it looked good. So it's all fractal, man. It's on every freaking time frame. So enjoy. It stopped you out and ran. Oh no, done for the day. Switch to minis. Switch to minis after 10 a.m. and caught 1 minute for presentation. Now, holy cow. Good for you, Chris. Silver bullet, wow. So everything follows silver bullet. I bought 8 layers of Disney this AM. Sold at 12. That's my green for the day. Good work, man. Good work, Chris. That's your Disney done right there. He bought it here, sold it. That's good. 1%. It's a nice little return on your money for the day. So you're right up inside this level here now. So you want to see if this ends up having to, that does motor through that level, that gap right there. You get on top of that and you start digging into this level again. I'll be back to bullish. This could be just running up into this order block here and rolling over and coming back down again. Well, you kind of watch it on a Monday. See what she does. Don't panic. If you don't catch any of these trades today, just stay focused on reading the price action right now. What's Walgreens up to? Walgreens. I want to see Walgreens get a little lower. If it takes out these lows here, I want to catch Walgreens on a low. Otherwise, I'm not quite interested in it yet. And I haven't seen a real reversal, so I'd like to see it take out some significant low, create a daily fair value gap reversal, catch the reversal, and then go long from there. Like Disney, like we did, like Craig did in Disney. You want to do that? I want to do that in Walgreens. Not that I'm anticipating a massive run, but if you can catch below here at $8, an 80-cent run to $9, even these old lows here is 10% return on your money. I don't know if you guys like 10% or not. If you're 40% or more. Big hitters. Look at that. Gap way down here. Came all the way back. I'm saying it's okay. I can recover. Bank of Nova Scotia. Didn't hit my level. I had this little reversal leg happening here. So if you take that from there to that little high there, 67 bucks. Oof, Gary. It makes him sick, I bet. Hope you're not in that, buddy. I hope you got yourself some money out of that. That's a huge drop. 68 bucks. Eek. I'm looking for this one to get reached down into here, 26 bucks. Sorry, John, I don't trade fundamental stuff at all. I don't believe in it. I'm a pure technical analysis guy, and I'm sure there's plenty of people out there that can satisfy your trades for fundamentals. I'm not that guy, so I'm sorry I can't give you anything on that. I can give you the exact turning points, and and I'm not trying to compare the two. In a way, I am. You tell me where fundamentals gives you a precision entry exit, like technicals does. You tell me where fundamentals tells you buy here at this dollar, this exact price, and produce the results that I can give you here. And none of this stuff is based on any fundamental. We just know there was tariffs. We're assuming all this volatility in the market was as a result of the tariffs. I don't care. When you get a reversal, you get a reversal. You enter in on your reversal, you take out on high, move to the sidelines, you just made some money. Fundamental analysis of that would not have given you that entry. And fundamental analysis did not give me any more precision on that, didn't give me any more insights as to that trade on a 1 minute chart in the NASDAQ with 100 different companies and all the stuff that's going on with those companies being affected by tariffs and all the complexity that fundamentals brings with it. None of that affected our entry for a quick return. Now, how much you leverage that from there to there, if you're a big leverage player, you just made thousands of dollars from there to there in 4 minutes. So you won't convince me that fundamentals plays a role in there. It doesn't. It hasn't for me anyway. And we've been doing this for over a year now. But I've been doing Michael's stuff for 8 years or so. So let's look at the next leg. I don't know. I know Derek's going to look at this and go, what the hell are you drawing from, Darren? Mm. Dun, 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 dun. Oops. Oh, I have to do this one. I've got this new, I was wondering why Derek's was producing different results than mine. It's because of this. I've marked it on my other computer, not this one. So I am going to, this is what you gotta do. Let me adjust my settings here. You take all of these things off. And you go, obviously leave that one. And then you go template, save as. Favorite tracement, bearish. Okay. Then we do this. I'm just fixing this up now just because I want something different on here. That's where it works. So there's two up there, 2.53. So we'll go to 2.5. Wow, was the MQ a killer in a beautiful way or what? 50% of retrace with fair value gap. Hans, I love the way Hans has always got his eyeball on this thing. Good for you, Hans. He's like the watchdog of this regular trading hour gap. I love it. I like for that to completely fill in now. This draw on liquidity, this new week opening gap. There's lots of those new week opening gap, new day opening gaps, draws on liquidity above you, and we still have yet to fill this. So we've gone over 50% of the regular new week opening gap already. If we can reach for the top of that at 550 or 533, that will put you 533. Will put you just above that 2.2 standard deviations. Um, 478. It's 75. 21 450. I've got as the. Oh yeah, you're looking up here, right there. Isn't that what that one is? Yeah, that's the 21,485 is the 75% fill. I'm still learning. I just wanted to ask because I keep seeing so many different opinions on how to trade on the internet. I like technical analysis much more. Yeah, John, don't let me influence you. Really, do your research. I've got a friend of mine who he's an engineer and he's obsessed with fundamental. He kind of says some technical stuff, but he's a pure listen to the news, listen to all that stuff. But he's got the hook right in his mouth when it comes to fundamental stuff. He totally believes the market is driven by buy orders and sell orders, and I can't convince him otherwise. And I really don't give a shit. As my other friend says, you be you, man. I know my technicals. I know I enjoy technical stuff. It works for me. It is my be all end all, only because I don't know anything about fundamentals. I could not, it's not something I can get any sense of certainty on. Because the more you get, the more fundamental analysis you get from people, the more confused it becomes, which is, I think, what the market's designed to do, confuse the shit out of you. So if there's an algorithm actually driving, if you actually believe that there's an algorithm driving the market, all that fundamental stuff doesn't mean anything. But you have to be an algorithm believer. And there's lots of people out there screaming at the hills. You are algo people are a bunch of idiots. All right. If us idiots are nailing these reversals like this, then we're idiots. Whatever. Don't even get yourself upset over it. Just go, whatever. You be you, man. Here's your macro beginning now. So watch this reverse here. Break market structure. Use this for support to come lower. Or just come back inside this thing. I want to see this level right there, right on that money right there. That's it. I want to see that be the low. There's no fundamental stuff here. That's it right there. I don't want to see it come any lower than this. That is the consequent encroachment of that, just under consequent encroachment. It just comes back to this order blocks right here. It's open. That's what I want to see, and see it leave from here. And if you see it break that high, that's my narrative. And if it starts to eat into here, I start to lose my love for this going long. The deeper it starts to dig into filling this, the more I start to go, I'm losing my love. Oh, if it comes down into the mean threshold, then I go, I don't like that at all. But I do like this. I do like that. And Tibbs, we got 50-52. So Tibbs has given us a push higher. Let's go, as the boys would say. As Russell and the boys would say. Let's go. Find what fits your personality and trading goals. That's true. I suspect we'll all have a full closure too. I'm looking for 510. Often trade entry over a larger range. I'm hoping for a full closure of the high of the day reversal made during macro. If you watch the ICT video over the weekend, they basically proved that the high of the day was already made. The high of the day was already made from I don't know what you're talking about, Ollie. He says the high of the day on the weekend? Or is he talking about Friday's high has already been made? I don't know. I don't know what you're talking about. The video was out before yesterday's open. I haven't watched the videos, haven't watched Michael's videos in a while. I got to catch up on some of them. Some of them people have been like going crazy over, so I've missed a few of them. As you can tell, I have a recipe I use every day. It's the same thing. All I'm doing is showing you my recipe every single day. I'm not giving you any of these. Occasionally there's something that you dig up out of the past that you play with. But in general, you come here, you just see me doing my same shtick over and over and over again. But it works for the likes of Hadi, Barry. Those guys are using it. It's working for them. So find one that works for you. Find a trade setup. Just watch it, the price action. We're just trying to stay in price action. Identify the range that you're in. What's the premium and the discount of the range that you're in? And how does price act inside those ranges? What candles, what PD arrays inside those candles is price bouncing off of or finding support on? If we're climbing a wall, a rock wall, what wall over here are we looking to get a foothold on to climb up higher? Where do we slip and start to lose our footing and we start to come back down again? At what level can we get our foot in this hole and just start rappelling down to specific levels along the way? So you got to have a fail safe. In other words, a turn point where it fails for you and you say, I'm on the wrong side of this. I have to move to the sidelines. Or where's the line in the sand for you that says, if my mean threshold fails here and I take this on the downside, I have a break in market structure. This level should now provide support. Now we've got a reversal. Now we're getting back into a market maker sell model. And we're coming back inside this range. So the fact that we're even reaching into here again, I start to lose my love for this, because when I saw that, I was like, great. Now, if we can get through that mean threshold and climb higher, great. Then all of a sudden it started coming back and I go, yeah, I'm losing my love for this now. So I wait and see if we break structure to the downside or whether or not we clear this out of here and go higher. He made an entry with a 5-point stop loss short because he said the algorithm had shown him that the high of the day was already made. Oh, I think I did see that video. I thought I was listening to his members section. How many people's he got on that now? Oh, he's up to 60,000 people in there. Wow. If you want someone to give you signals, that's the guy to do it. He'll tell you your entries and your exits. I spent my Saturday investigating. Here's what I found. If 1.5 to 2.5 macro spools if we create a new low or high on the day before and during the 250 to 310, then the high of the day has been made. Look for an inversion where the midpoint of the top candle will be crossed. Ollie, if you could actually put that on a chart and point it out, like do a screen capture on a chart, point that out. I'd love to see it. If you could share that with our community, I'd love it. Well, I'd be grateful. So thank you for that. Yeah, if you could do that for me, I'd appreciate that. Just do a screen capture of that very principle that you discovered, and just do a visual and just stick it on the either the index futures tab or just the general section if you want. It sounds like you might have something really cool there. Will do. Thanks, buddy. Appreciate it. You guys can look forward to that in the Telegram channel. Still no break. This is still a breakaway gap for me. Another breakaway. Because it's got to go higher though. This could just turn around and go slammo and just take you out. So I want to see this still provide support, push higher. Stop loss will be sitting just down in here. And one thing, just to be fair to those who are doing fundamental analysis, I do not want to mock all the stuff that you guys do in fundamentals analysis, but keep in mind, we are on a 1 minute chart here. I don't think anybody in a fundamental looks at a 1 minute chart. They are on such higher time frame premises. They're on the daily, weekly, monthly charts. So they understand fundamental analysis that affects markets more on those levels. I still use the exact same thing I'm showing you here. I use it exact same thing on these higher time frames. Exact same thing. In any asset class, it's exact. What I show you here on a 1 minute chart is no different than what I would show you on a daily, weekly, or monthly chart. Again, it's fractal. That's the difference between algorithmic thinking is proving a theory out, and it has to be provable. That's why Tibbs works on all time frames, all asset classes. I discovered Tibbs and I back tested it on multiple different time frames, multiple different asset classes, and you guys see how well it works. And that I discovered years ago, and you still see right now to this very minute, this very day, you see it still works. So have I got something algorithmic there? I think so. Until the markets change and Tibbs doesn't give us that anymore. And I've already seen people starting to say, oh, I've got Tibbs and I've changed it around. I see this. It's like, oh, so you're reinventing the wheel, are you? I like this and this. That's no good for me. I like this over here. Go, oh, you're the fucking legend at it now, are you? All right, carry on. Do your thing. If you make it better, shit, share it, man. Share it. Come on, let's get out of here because we've been waffling around it. This is just marking time here. It's not really. Is there a news event that I'm missing? Do you guys see a news event coming up? Nope. It is non-farm payroll week though. Hmm. Yeah. I saw that. It was amazing, but not helpful to me in any way. He didn't teach it. I theorized the back tested that for the past months. Oh, Ollie, share it, buddy. If you've figured out something and it's working, share it, man. I want to see. I want to see. So far, everything that he has showed us or shown us on the these extra little things he points out, like for this right here. You guys are doing this one, I would assume. This is the more Monday open range extension. How we've now you want to go here to here, a fib tool, and you want to go, and you want to go bullish. Oh, did I get it wrong? Maybe it's bearish. Bearish? Got them backwards. There's three standard deviations, brings you right on the money there. Right there. It comes back above that, and then it keeps going higher. Drops all the way back down to here. So we didn't even get a retap of this, but three standard deviations will get you all the way up to there. I gotta make sure I reword that. This one, settings, oops. I just gotta change that in the settings. I gotta change this, and then we gotta go, add all of these in here too. -4. It's 5. I don't like yellow, so let's stick those over there. Great. You get a -10 standard deviations on a day. We're already up to way up here. That's 56. Where is that on the standard deviations chart? That's way past our 10 standard deviations for the day. Eek. From the midnight open. How would you like to have caught that sucker, hey? We don't want, I don't like black. Let's go here. Or yellow, I should say. I know this is probably driving some of you nuts, but I want to, this one's the reversal. Save, and we're saying Save as. Bullish. Save yes. Okay. Meanwhile, I'm back at the ranch. Let's get back over here and see what's going on. We've got to get a body below here. See how it freezes on it? Tell me that's not a significant level. That holds on that and then starts to go higher, closes above here again. You've got these lows taken, reverse here. This order, these breakers right here, these two candles make a breaker that takes out these lows. Then that becomes an important level for me. So I like to see this get above here, find support, run through the mean threshold of that candle, and then use these two candles in this consolidation as a means to go higher. This would also be a CAM 1, 2, and 3 model. Those of you who are watching CAM model stuff, if you're a CAM model trader, this is your CAM models. I don't have a box that says CAM models. We'll call that a consolidation. Forget the 4-hour thing. That would be the consolidation. So you'd want to see a price displace above this, come back, find support for CAM 1, CAM 2, and CAM 3 would be from there to there. Take 50% of that range. There's your CAM 3 model. Right there. So back off this order block here. Does that make sense to you guys? Those are 3 different models. I worked on the calendar again this weekend. I think I've got 4 months finished now. I got 4 different trade models. Basically, I'm trying to make the calendar a way of showing you each month, look for this one setup, and then it builds on it. So month 4, you put together the last 3 months that I showed you. Then I'll show you 3 more months. And then you put together the last, 8 months in, you put together what you were just taught here on the next 3 months. And then the last 3 months, you get the same thing. So the calendar is actually a learning calendar. So you want to see it come back into this little level right here. It's actually not an inversion yet till that candle closes, but whatever. I'll still keep those in there. There, now you want to see it come back and give it a little tap. Right there. Stop loss will go down here. That's inside here. So I want to see those. We've already reached into the rejection block here. This I want to find some support. So if I trade below this, back into it, I'm going to close that out before it even comes to my stop loss. Thanks for your live streams. They make learning the market setups way easier than regular ICT videos. You're welcome. Don't underestimate the value of Michael's videos, though. I didn't get where I am without him. So if you can put up with all his ranting and stuff, then actually I don't want this to be here. I'm quite happy with this staying just below that constant encroachment of this here. It'll be just below that. Yeah, so Michael's, I think somebody pointed this out the other day, which is really good. Michael doesn't go into rants during his core content videos. If you were actually live with him back in the day, he had tons of ranting going on the sidebar instead of like during the day, he'd have these 2-hour, 3-hour videos where he'd be live with you like what I am right now. And he'd go on these incredible long tirades, which was just, I loved them. I thought they were great. This tinfoil hat things, they were entertaining while we're waiting for the market to do its thing. And when it came to the core content, he actually teaches you core content stuff. So if you all these new the 2022 mentorship and the 2024, you get his rants as well, which is kind of hard to listen to sometimes because they can go on for so long. And then he buries a nugget of information in there in his charts. So you gotta endure them in order to to see what it is he's trying to say. So I definitely recommend that you watch his core content video stuff. It's really, really important. And then you come here and we'll just show you how to look for specific levels and why the markets are algorithmically driven, and you can forget all that noise. There's so much noise out there. If you keep it really simple and just look for simple setups and simple logical levels and say where, and have a fail safe. I came up with this fail safe idea a while ago. I don't know when I came up with that, Derek, but we built a fail safe last year. The whole idea of fail safe, and I like the fail safe because it basically says, where does the market fail for me? If this goes wrong and this does not go higher, where does it fail for me? Well, it fails if we get back below here and use this to leverage this mean threshold of this candle. I don't want to see that. So now I want to say this level here is very important for me. If I break that high, my stop loss will come right up into here because I don't want to see this get revisited. If it does get revisited, I'll move to the sidelines because the market's not acting the way I want it to act. Not me underreacting. I want it to react my way. So that's what I'm looking for. Michael, you could say I can slam it right up against here and I'm confident that it's not going to come down below me. Well, I could turn that into my failsafe and say, if it drops below that and comes back in, then I'm wrong. So you could be all cocky and say, oh, I'm going to put it right there, just underneath there. It's never going to come back there now. It's going to take off. Right? I'm confident it's not going to come back there. Right? So if it takes that high, that's a pay yourself thing. And I'm going to move it right into a break even. So ideally, I don't want to see right there now. This candle, its candle's open, has not been hit, so I got to go just below there. I don't want to see it get lower than that. I don't even want to see it tap this. It's already done the tap. It's went above it, came back, it tapped it. Now there's retapping. I don't like to see retapping like that. Like this constant comeback. If you're going to go, tap it and go. Act the way I want it to act. Or bye-bye. Right? And when you study the price action enough, you'll start to go, Is it acting the way I want it to act? If it's not, move your stop loss. I'm moving my live stop loss right into here. I'm saying, screw you. I'm not even going to give you that half that mean threshold anymore. And if you tap me out, you tap me out. It just tapped me out. So I'll look for this one here. I don't want to see this come back into here. So now for me, my live account, I don't want to see, now I'm out. That's like I paid for the trade. Now I'm going to wait until we get above these highs and see if we can use this. Now if this goes and takes off on me, I go, oh well, I squeezed it a little too tight. This one's staying on for you guys, and we're leaving it at a logical level of, I don't want to see it get back through this order block and start digging into this candle, because the line in the sand really is the mean threshold of this candle. But that right there, if we're not finding some lift off of there right now, then it's not worth it for me to let it come all the way back down here. So now it's double tapped the top of this. We've hit the consequent encroachment. So now I'm moving it to the cost of the trade. So and it's sitting on a 18, 19. So here's your 16. This is 16 here, 16, 17, 18. So 19 can reverse against 17. 18 can reverse, sorry, 18 reverses against 17, 19 reverses against 18. So I don't want to see it come back down here. We'll wait for a cleaner setup if it doesn't. And don't sweat it if it, like from my live account, if it takes off, I just go, oh well. But that's the support. That's my narrative right now, where I want to see price act. And if it's not doing it, then it's all this chop you're seeing in here. You say, okay, well, I'm not willing for it to just keep chopping around in here. You either cover my cost of my trade, do your thing, or I'm out of here. And that's all because I want support off of here. And it's 1, 2, 3, 4. Now you've done your thing. And I'm not giving you any more opportunities to come back here. If you do, you give me 120 bucks, and we call it a day. Great, Ollie, I love it. If you found the Willy Wonka golden ticket, man, share it. I will give you all the credit. Or if you just want to share it on there, you say keep it to yourself, then we'll keep it to ourselves. But really, it's the community. I'd love to be able to bring it on here and show everybody and give you all the credit. I don't care. This is Ollie's discovery of Michael's piece of the algorithm he didn't want to share. And here's how it works. Here's how it back tests it. Let's do it. And we'll put it up here. We'll call it Ollie's principle. Ollie's principle of market analysis. Craig, D, would you review where and when you bought NQ this morning if you were already covered it? I'm sorry I missed it. The buy this morning, if you were looking at time and price, remember me mentioning time in a bottle, the TIBS, the 9:10 turn. So there's your 9 in the 9 o'clock turn. So you have a 9 reverse, and then you wait for the 10 o'clock to take out the 9:30 low. 10, wait all the way around till 10:30. So wait for this level to get taken. There's your reverse right there. There's another reversal here. And remember when I told you, when you have one candle that rips through 1, 2, 3, and does not close above that, it runs through 3 different arrays. That one, well, there's more than that. The main ones are the reversal, the order block that sets the run, and the next SIBI, and the order block that sets the run, or the breaker that sets the run below the next low. So as soon as it candle goes through there, always, okay, if it runs through this one, you take this one. Or sorry, if it runs through this one, you take, and does not take that one out, you come back and take this. If it runs through this one, you take this one. If it runs through this one, and this one, and this one, you take the last one. See how the last one, it runs above it, but does not take out these. It takes that one. You're inside this one. So you take that one and you continue going higher. You should see that stay open. So whenever you hear me say, I'd love to see this stay open, if this candle is ripped through several PDAs, I expect the last one to be the one that it keys off of to goes higher. If this candle would have been above that level, I would have keyed off of these two candles to go higher. So there's your reversal, Craig, right there. So that's, always watch these candles. Go back and back test them. If you don't believe me, you'll see that when one candle rips through multiple arrays, always wait for the last one that it took out as the one that wants to come back, hit it, and to keep going higher or lower. Back test it, check it. You'll see. You'll see. You will see. See, you could pay yourself above these old highs, at least one. I was too busy yakking a minute ago. I should have been taking at least one off of that. So take one, we'll sell that. We'll take a bit of profit. Now we're only going to get 80 bucks if it comes back and takes us out. So pay yourself, be indiscriminate in your indiscriminate, is that the word? No. Be very specific about your rule following. If you break a high, pay yourself, move to break even, and let the thing ride. Now it's a zero stress-free trade, right? The stress-free trade, you got a little bit of money in your pocket and you cover the rest of your trades if it comes back and takes you out. And you're still following with your fail-safe. I've got nothing in here that warrants a reversal just yet because we've taken out a high, so I'm looking for a reversal. I don't see a reversal in here yet, so I don't, unless you're looking at this immediate rebalance right here. Watch very carefully. Stretch this out a bit here now. Yeah, this immediate rebalance. This is where my eye is going right now. Right there. Watch, see if it gets below here. And then you got box to box. It's not a discount box though. So if we rip through this one, we rip on the other side of this, I expect it to rip through here and dig into this last down close candle. See how the wicks are just doing a little bit of damage here? That's all right. Do your thing. There's nothing over here. This is where it gets really kind of fun because now the markets are getting near that lunch hour reversal. So now I do not want to see it get below here. It's done its probes down here now. That's the lowest one. I don't want to see it coming through this immediate rebalance now. Get up on top of it, use the immediate rebalance to go higher. Mean threshold of this candle is what I'm looking at now. See, we've traded below it here, and then we traded back into the open, and now we're going lower. See, look at that. See how it tapped below there? Quickly tapped on it. Look at that. Boom, boom. And then went lower. So I'm looking for an acceleration through here now. Right back into that level. So if you're last, we're inside us this range, but this is not a premium. This is staying. But if you take this, and I've showed you guys this one in the past, watch this. Remember premium, discount premium? See how it accelerates through it? You love it when it does that. So anyway, so your so that little trade there, we're watching price, and then we managed to say, you know, it's acting super sloppy. If it breaks this point, I'm out. Find your fail safe, and you got to bank. You got to bank a bit of trade here. You should have caught that one above the high. I banked a bit there. Watch for this reverse, and it gave you that little tippy tappy and went lower. We want to see accelerate. It did. It ran all the way through that. So now you got premium, premium, discount, premium inside a premium and discount range. Does that make sense? And you see how this is only in the discount premium, and this one is actually in the discount premium as well. You see that? Interesting. Premium, premium, discount premium inside the premium portion of the large range. So there's the acceleration. So that worked out exactly as we wanted it to. As soon as we saw this, we were like, nah, I don't like to see, I want to see that's where my stop loss is going to go. It's put me in profit. And I want to see acceleration through there. You got the acceleration through there. Now we've closed below it. So now we're back into this candle that we're talking about. You see? Inside all that slop, if you look hard enough, you can find your points where your failsafe can go. You looked at, thanks, it ripped so fast I did not know where to get in and where to stop it. All credit to ICT. I didn't know if he coded it or spent his lifetime backtesting, but he's the GOAT. He certainly is. All hail the great ICT. I agree. Tibbs 27. Come up higher now. If this one doesn't close and then you get 30.32, reverse, come back down, look for, what are we looking for next? Tell me what's your inside this range. What am I looking for next? Quick, somebody post it on the channel or in here. Where do you want? Which one? Where's the next level? Quick, before it hits it. Someone tell me. It's 2 letters. 21,238. 21,238. Oh, you're way down there. No, that's the next PD array inside this range. What's the next PD array? Don't overshoot your PD arrays, you guys, because your 238 may never get hit. That's way down here. That's way too many PD arrays away. Inside this range, we're just trading on the horse. You're taking an arrow, you're riding on a horse, you're taking an arrow and you're shooting for a target down here, which is fine if that's your strategy. But we're just trying to say on the horse, because if that reverses and goes back against you, and where's the place that it can reverse on? Anyone? Anyone? No one? Okay, I'll give it to you. No one's saying it, so right here. Right about there. That's the next downside objective to reach for, which is MT, mean threshold of this breaker. This one, that last big down close candle that ran out these highs, that's your line in the sand. So watch it reach for this here. And I just eyeballed it, so you might be right there. So now we had this debate the other day about whether or not there's the mean threshold right there. Where you put your mean threshold. If you do, some of you might, Michael said both of these, oh, well, they both work out perfectly in the same spot anyway, so watch right there. Jay and the trader. Mean threshold. Mean threshold is this breaker candle, this last bearish, this is a bullish breaker. It's the last down close candle before a run that takes out an old high. Okay. It's like the parent breaker. You could say this guy would be a little swing here. You might call that the breaker that takes out that high because this one didn't. So its mean threshold is what I want to see price come into. That's your line in the sand. You want to see that hold to go higher. That's where you go, put your line in the sand and say, I do not want to see it get below here. And if that holds right now and starts ripping higher, your objective, your 2 something down here, you're going to see why these PD arrays hold you and frustrate you, because you overshot PD array, which is the rejection block, then half the wick, then the rest, and then or the old low. So there's like multiple PD arrays that you need to understand to see if they get a reaction off of them, right? So if that mean threshold holds price, you want to see it go higher. That's your line in the sand. So if you're like, I'm stuck inside here. So trading internal range liquidity, discount array right here, not that I would key off of that to go higher, but it's a level I'd be looking for. And then I'd be back to analyzing this little level right here. See if we can get through this, because what happens is once you get below it, you come back, tap it, you want to see it range or that extend, right? And it did to the near the mean threshold here. And now if it gets back through this, you find support at this level and start pushing up for the inside this range. Now we're looking for a premium array right there, because that is definitely in the premium box now. So now you go back to boxing again. We don't have a box to box here. You have this box inside that range. So I always go from whatever box is sitting inside the range of a discount to a premium box, which is right here. So watch this level right there. And it's above 50%. So that makes it the premium box. And keep in mind the order block as well is supported inside there. So you really have to take it to from the bottom of the order block to the top of the box. So that box is actually overlapping. It starts here, ends here. We'll just watch, see if it makes it back into the body there. Give us a little kiss on here. Start marching higher. There you go. Hit it. Ding. The boxing carrot. Now you know why carrot is my little mascot. The boxing carrot. Oh, JN, sorry. You're answering my question. Maybe there's a delay in the video. People aren't responding fast enough. There's my paramedic in me. It's like, get this done, get this done. Why isn't this done? Let's go. You should see me on scene when I get a bunch of firefighters. I get my firefighter buddies. I'm like, okay, you start the IV. You get the blood pressure, and you put the leads on and the monitor. Okay, you get me some drugs. Let's draw these things up. Let me figure out what, get some oxygen on that guy. I got 5 different people running around doing things, and I want them done yesterday. All right. So anyway, there's our premium array. We didn't quite come back down and tap our thing, but we see how we've come up into here. This one is not an immediate rebalance. Don't count this side. I count this side. So we're looking for that level to get taken on the upside. We want to see that level there now get taken, but see how on the range, it's above, it's in a premium level. You want Derek's discount here, right? You want a nice little discount to run higher. There's nothing down here to give you a discount run except this little order block. Watch right here. I don't know why I like these things. I do like them. Watch right there. See if it hits this box right here. So far, we're still inside this SIBI, consequent encroachment. So box to box to box, back and forth right now. I'd like to have seen if it hit that order block. Didn't. Consequent encroachment, like to like array. You'll see that that's the advanced thing I talked about last week. Was when you see these like premium discount arrays inside ranges and it hits like array to like array, it's not only hitting the premium to discount, like to like, it's also hitting a specific level inside the arrays as well. This is good. Keep marching. Come for the carrot, my friends. Come for the carrot. So what's your next upside PD array inside this range? Quick, quick, quick. Answer my question. Where's the next upside array? Stay on the horse. What's the next point you want to see it tap? That's the precision I want you guys to have. What's the next little tappy tap point that you want to see that hit? There you go. It's hit that box now. Watch to see if that wick holds price. Tap, go. I want to see that reverse now and start going higher. It changes up for me if we start digging back into this. It's high, or it's open is, sorry, this close is the last little leg. I don't want to see the mean threshold get taken. I want to see this piece stay open. So there, and there, that mean threshold are the two, three downside pieces that I'm looking for in terms of that candle. Where's my upside, next upside PD array? Who's got it for me? Hans, 23,384, he says. Is that an old question? 23,384. Sorry, I was no bystander effect with you around. No, you're not a bystander. I want you to actively participate in this. See, there's the bottom of it right there, and it's right on a 38 candle. This is the Crazy Ivan look back, and then I expect to see that go higher. If Crazy Ivan sees you right on a Tibbs, a specific level I'm calling for at a specific time, Tibbs, now I want to see that go higher. Power of Tibbs, my friend. Tibbs and fibs. Sorry, bystander Des. Get ready for the down. Oh, Chandra saying going down, hey? Where's your point? Just saying it's going to go down is too vague for me. Give me the reason why it's going down. Where does it need to break for you to go down, Chandra? Bearish order block 1120. You said 1120 is the bearish order block. 1122. 1122, 1122. This guy right here? What about it? Okay, I'll give it to you. It's right here. We've got 1, 2, 3 levels inside that. So you want to see the next one's the tap. See how it hit off that level? That little box on a Tibbs. Hit, look at there. Bang, hit it. Love it. That's the next array. What's the next array after that? Right here. It's these two candles take the low or the last candle's high. So it should tap the carrot right there. Now, do we react off that and come lower? Look at that. Is that not a beautiful thing or what? Even if it goes back up there, I love the sensitivity of that level. We're calling it right on the money, and it's got a sensitive level there. That's when you understand the PD arrays, my friends. So the next one is on the downside. Where's the next one on your downside? Right there, the top of that thing. I want to see it hold there. Oh, this is magic. I've got my finger on the algo. I'm telling it to move. Ah, love is a beautiful thing. Now, come on. So see how it tapped it? We got a bit of reaction. Now look at where's it going to go. Mean threshold. A full fill of that fair value gap. What are we on for Tibbs here? 40.42. That's a 40 turn. 38 turn. A 40 turn. Gotta love it. Can't ask for perfection any better than those two. So here's a 40.42 now. So downside, looking for this here, and the high, the open, and the low of that mean threshold. Looking at all three of those candles together, you look at the high, the open, the mean threshold is in here somewhere. You want to see that stay open. So there's multiple different arrays you're looking for here. It's a retap of this candle and retap of this order block. It's called a mitigation block because this is not a breaker because it does not take out an old high, so it makes it a mitigation. So if you mitigate off that, and it's not as strong as a breaker. Breakers are much stronger and give you some more support. So you could expect to see it just eat right through that thing and start coming back into that. Look at this mean threshold down here again. See how it hits the high, the open of that candle. Find some sensitivity off of it. I love it just when it pops on that. Now look at the mean threshold. The mean threshold of that candle is sitting at 400. What's the low of this candle right now? 400.75. And it's a 42 candle. Hit it again. Now you take the rejection block, which is 398. I think that's what the open is here. 399. What's the low of this candle? Oh, there you go. It just hit it now. 398. So you hit the rejection block. If it pops off of there and starts going higher, you go, that's internal range. That's their internal range areas of sensitivity. You want to see how they react off of them. Not that you're looking for an entry. That doesn't line up with any entry that I would play, but I'm looking at that level and I'm saying, do we have sensitivity on there? Right now, you've got a little kick off of it, right? Back inside this range now, pull your fib from high to low. And what box have you got up here you want to get through? You've got one that wants to push this lower. See how we got this high taken here? So let me move this over here so you can see this. There to there. Oops, right there. Oh, you'd have to include that little piece up top there. I can see that. So you see how you broke that down to the downside? You came back up, hit it, and then extended the little range here lower. Now you want to see if it gets back through that level, find some support, and go higher. See how that little rejection block we were talking about has an area of sensitivity. You get back above, you don't worry about that guy anymore. Get rid of that. So now I'm looking at this level here and this level. This one wants to go lower, this one wants to go higher. So where do we close? We closed above this one. So let me just move this out of the way a little bit there. See how that low, that high right there? See we traded above it here. Now you want to see that extend for Mr. Carrot here, all the way up to here. If we lose this one on the downside, you got this little imbalance right here. And don't ignore that little imbalance. If this was a daily chart and you saw this mess over months, an asset is just sitting inside this cluster of shit like this, and you wanted to trade this off of key levels. You imagine these key levels that we were talking about when it came down to hit that, and you're saying, I want to see it hit that and react off of that. And then you go down to a 1 hour chart or a 15-minute chart and you see this kind of beautiful reversal around 9 or 10 o'clock in the morning in New York, or that 2, 3 o'clock in the morning in London. And then you go, now if you catch it on a run, I'm going higher. That's it for me for the day. I've zeroed in on a perfect level I was looking for. Time of day, TIBS, reversal. I'm aiming for what? I'm aiming for the premium array. And then you would have caught perfect entry, perfect exit 2 days later. No different. Now we're looking for the carrot on the upside. After we got a reaction off of this, you go, if this comes down to that rejection block, I'm looking for any opportunity for a reversal here. So let's take this 1 minute chart and pretend that it's a 1 second chart. I'm going to show you this. So right at the rejection block. Sorry, let's make sure we know what the spot I'm looking for here. So you get my point. See, we hit the carrot already. I'm going to put a little block around here like this. So we can look for, on the lower time frame, let's make sure it's a different color. Make a nice little orange, red, whatever color that is. Let's go down to that 1 second chart and see if we can find, let's go back here. There it is right there. All right. So now what you want to look for is we look for, I'm going to rattle your brains here. Watch this. So we get right to the rejection block. You hit it. You see a reversal right here. Boop. You hit right in it. And what does it hit? Look at the seconds. Look right down here at the seconds that I'm in. It says 43, 44, 45. Tibbs. 48. Leaves town. 54, 55. Starts to trade away. 58. Ooh, look at that. Look at that. 02. In the seconds chart, does my Tibbs work all the way down to a 1 second chart? Right, it does. Look at this. 7, 8, 9. Oof. Start leaving. That's Tibbs, man. That's an algorithmic piece of gold I gave you. Algorithmic piece of gold. And you could have caught that on a 1 second chart right at that point. So that's what my point is, that if you're doing this on a 1 day chart and you're going to a 1 hour chart and that was your 1 hour reversal on a 1 day chart, you would be catching that for the rest of the day. Put your trade on and walk away from the charts. Put your stop loss down there. Once it hits that, put your stop loss down there. Now can you see how Michael can have these super tight trades? Now, given if your spread was bigger than this, as soon as you put that on and put your stop loss there, your spread would take you out instantly, because maybe the spread is that big. Who knows? Whatever your broker puts. So you'd have to put it in an hourly. You know what I mean. Anyway, that's Tibbs for you. Do you see the magic? Do you see the magic? Hit the carrot. Now, we're back into Chopsville. Does this make sense? If you guys like this stuff, hit the like button. Give me the thumbs up. If you're new to our channel, hit the subscribe button. We're here every day. We're here to help you stay on price action. So big money has mitigated their position, now looking for downside liquidity. That's not a tradable opinion. No offense, Chandra, but that's not a tradable opinion. Give me your entry. That's a fundamental opinion with no specificity. You can't make a living off of just, that's what I see, so that's what's going to happen. Give me specificity. On 1 minute, 3 minute, 5 minute, whatever chart you're on, Chandra, and I'm not trying to diss you here or your opinion. It's important, but I want you to tap into that, whatever your gut feeling is that gave you that opinion that buy side's been taken, sell side. Now, where's the transfer point? Where's that point where you can turn that into a trade? What's the strategy that gives you your inference that it's going lower? Because if this takes that high again, it continues to reinforce that idea you have. As obviously they just keep working that buy side. Now they want to finally hammer it down. You may be right. It may hammer down there, but I don't see that happening just yet. For me, it's got to break through this mean threshold on a 1 minute chart. So if you're looking at higher time frame stuff, this still hasn't been filled. The gap still is a closure. And then if we work above the gap and come back to the gap to find support, then your theory of going lower is completely shot. So I need more reference to it, Chandra. It's a fine opinion. I have no problem with it, but I like anything. I need proof. Give me the technicals behind that, or even the fundamentals to tell me that you can zero in on price. So now we've traded back above this candle. We've run out that little high. Oh, we haven't run out that high yet. So let's wait for this candle to break above this high with a body. Then this becomes an important candle. And so does this back here still. There you go. Peter, no bystander. Oh, never mind. Oh, never mind. Sorry, did I miss something you said there, Peter? Relative equal lows. It looks like time distortion. Yes, I agree. That's more time distortion. But this is interesting. Don't you find this interesting that even in time distortion, it's still hitting small little arrays inside smaller ranges? I love this stuff because it shakes all those hardcore people or those non-hardcore people in price analysis off, and they just go, I just give up. I'm just going to move to the sideline. But really, if you can catch precision entries like we talked about here, like, not that you would actually catch them, but just to smile to yourself and say, yeah, baby, it hit it. Yeah, baby, it hit it. Yeah, it hit the carrot. Yeah, right? Draw that little box out again that we had down here. Let me draw that out. You look where it hit again. Oh, it didn't. It didn't hit it. It came back to this candle's. Remember we mentioned about this candle's high? Look at that. Go back and you'll hear me mention it. Right to it. Right to the freaking, that candle's open is 40175. Candle low, 40150. 40175. So nailed it. A quarter of a handle into it and went higher. Took out the old high. Back into this level again. You want to see this whole price now and start pushing higher. So I want to see this candle. Back up here. Now we've traded up above that candle. No, still no body above there yet. I know it's been validated. Michael considers that a validation. I want to see a body get above it though. And then I'm more happy to use it for a support level. Do you see SMT at all, D? I don't use SMT. Derek's really good at SMT. There's some guys in here who are really good at SMT. I don't use it. I never look for it. It doesn't change how I look at the markets at all. It doesn't. It may give you your bias in terms of which one of these you want to trade, in terms of NQ, ES, or the Dow. But if I'm just on NQ, I'm still in price action. I'm still staying here. So what's going on there with SMT does not influence me whatsoever. Not that it's wrong, not that it's bad. It's not a tool I use. And some people like Derek and those guys can use that really, really well. They recognize it. They can zero in, switch over and say, I'm going to go into here. SMT tells me this is the one right now that is the lagger that is it's got to catch up. So I'm looking for, if you're using these principles in there, to go catch along. That's way better trading than I can do. Or I'm even aware if I tend to hyper focus in one area. See how we're through it? I literally closed below it. So that's why I want to see this body get above here before I use this candle. Otherwise, I just look at that as a place to march through. Start running back down here. This candle is the important one again. You do all three. Michael says use all three, but the last one is the most sensitive. Look at that. Bang, hit that little box area again. Mean threshold. Oh, now she's running through. So now I look at this one here and look at this candle or this spot right here. Now if I lose that, then I look for these equal lows in the rejection block next. Darren, good morning. Of course it works in all time frames. It's tried and tested over years by our great Michael. Our great Michael. You're not talking about our you're talking about my Tibbs or Michael's principles are proven throughout all time frames. So I'm 100% convinced that he's got an algorithmic process. Tibbs is an algorithmic process on all time frames, all asset classes. I like that. So yeah. Yeah, Captain, I agree with you, man. Agreed. There's no confirmation for a short. I'd want a body to close below 340. So now Chandra's like, I told you, right? Which is right. You know, right now I'm going more bearish. The moment we hit the carrot, there's the carrot hit right off that key level. See that? Now, get through that, Chandra, on a close, then I'm aiming for here. And when I get market structure break down here, and we use this big ass candle right here to go lower, I'm with you, Chandra. Let's get going. Let's aim for the downside. But that's the proof I'm looking for, not a fundamental analysis when you're saying, oh, it's going lower. When? At what time? At what point? Right? Look at that, Tibbs, 52 candle. Right into this candle here. Look for the mean threshold to get taken to the upside. You notice it doesn't. There's 58. Mean threshold still holding. Wait for it to close below it. Visiting your content every day. I'm glad you are, my friend. You're welcome to learn as much as you can here. I was answering a question you had and was a little high compared to the target you gave. Okay. Multiple trades are possible with smaller runs. Yes. Inside small runs, you can catch small raid on liquidity. But when you get into these marking time moments, like at lunch hour here, I like the whole 12 o'clock reverse here now. Look for 12 o'clock to take out these lows. It would be really nice to see these lows get taken and see a reversal and come back into this range. If 12 o'clock extends really powerfully, comes back and uses this for support, then we're fully involved in Chandra's retest of this whole range here. I take this range from low to high and I look for 50%. So I'm not really bearish until we break that 50% on a big old displacement candle. Otherwise, retail bull flaggers are saying this is a bull flag. They like to see support at this level and then go higher. We're already going lower inside here. Look at that. Watch that level. Monsieur Garrett. We should put him down here at the rejection block if that's taken. I'm learning else from you too. It's quite useful and much easier. Thanks. Agreed. There's no confirmation. Daz mark 11:16 a.m. down candle and mark its high and low with a fib. 11:16 candle and mark its high and low. 11:16 candle. 11:16 candle. This one right. 16 candle. This one. Mark its high and its low. Let's do that. I want to see what you're talking about, Chandra. Mark its high and its low. Right there. She says mark the high and low with a fib for equilibrium. Why this candle? Because it's a breaker? Is that what you're saying? It's a breaker? It's found support? You went through the equilibrium, came back to the equilibrium, went through the equilibrium, back to the equilibrium, through the equilibrium, back through this way. So I'm not sure how this candle way over here is still providing. But that's the one you're keying off of right there, Chandra, the 1116 candle. Okay. If you've got your, I don't understand it, but if it's working for you and that there's a sound logic to it, and as soon as you see that broken, you expect that to get. So my question to you is, when you were calling this to go lower and it ran back through that, how did you know it was still going lower based on that candle? That's my question. Interesting how it came back to that little chart here, that 1 second. Remember the 1 second chart? Look for, remember the inversion that we got, found support on it to go higher. See how you trade through it? You came back inside it on a 1 second chart. Now you wonder what's going on in there. Remember when we were at 1 second? Remember we're looking for this low to get taken out. Where was it? Over here. We see that reversal happening. Went low. Oh crap. Put that back. Now we're saying it went through it, banged around on it, came back and banged around on it, and finally went lower. Interesting. Right on a 1 second chart. See how that mean threshold is holding price? That's why you mark these things out on your chart. Tell me that's not an area of sensitivity. I want to see these equal lows get taken out for lunch hour though. So that would be the next little run I'd like to see. I look for SMT between ES and NQ. I find SMT is a great reversal signature, but only during the macro time window. Oh, see, this is the kind of stuff you got to post on the charts, Ollie. Like, take your charts and be specific about the time frame that you see it on. Say, here's the macro. Let's say, here's the macro 1150. See that 1150 right there, 1151. We've got a reversal, taking out an old high. If it retraced back into that, that would have been a nice short running for the lows, because there's nothing in here that gives us support inside that small range. So you expect to see it run straight through the lows. And the macro, and there's an SMT divergence. So show the macro, block it out so that we see it, and do 3 chart comparison between SMT divergences or SMT smart money tool or technique, and show us that macro. This time, this is when the divergence occurs, and then I can go back and retest that just so I can see how your theory works there. I'd like to see that if you could. Thanks. Appreciate it. That's the teacher in me. I want you to teach me. I'm keen to learn something new, man. I love it. And we got a great community. You guys got some really great people in this community that can help you out with some stuff. Like that kind of observation is awesome. You get Ollie obsesses over stuff like that. Abs, man, Abs obsessed over stuff. He shared stuff with people in our channel months ago, and people glazed over it. And I tell you, it has been a it's now standard, and it was that first presentation fair value gap. He was studying that stuff years ago. It's only just recently come back into favor, and now all of a sudden it's a standard thing to put on charts. He shared that with people months before it actually became standard knowledge or a standard practice. There's other stuff he shared with you guys, and if you're paying attention, there's some people in there who've got some freaking brains. Let me tell you, they make me look like a Stay Puft Marshmallow Man. I tell you. If you're wondering why that's banging off there on a 1 second chart, go down there. You'll see it in there. If it runs through it, that's fine. But it's an interesting little bang off point there that we just marked on a 1 second chart. Um, you're the man. You're the man, Abs. You're the man. I love fellow obsessors. Like Ollie obsesses over something. ICT gives you a piece and says, I'm not going to give you the secret. Ollie's like, you want to bet? I'm going to find it right now. You just obsess over digging around in charts. That's how I am. I'm gravitate towards people like that. The Tibbs, I became so obsessed over, I built bots around the theory I had. I had pieces of paper. Oh, just so I'll remind you guys about my binders of notes. Here's binders. You want to see notes? That's January 2020. That's notes, 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 and I just print them all off. I make notes on each one of these pages. I print them off, and I've got charts galore in there like this. That's just a binder so full of notes, and that's just one binder. Next binder, next year, same kind of thing. You get like all these different charts, and they're all screen captures and notes and listening to what Michael says. If you're not screen capturing and making notes, you're just coming back here and just getting a repetition every day. Repetition is the mother of skill, but make notes, man. And then take these things on vacation with you. That's your easy reading. While you're reading your novel, read your books, read your notes. Anyway, I don't know where I was going with that. I went on a little sidebar. Yeah. Oh yeah. So anyway, that was the I obsessed over this stuff, and I was marking these down. I would go back into charts, and I would take a 1 hour chart. This is where it first came up with the idea of Tibbs. Went on a 1 hour chart, and every single swing point, I created a piece of paper. I marked it all up. I drew lines on it, and lines, 60 lines, and then I marked every one of them at what hour they turned on, highs and lows. If that counted me a high and a low, I put that time, and I marked the time, and I have these little ticks on there. And when you obsess over this and you go back years, I mean, I went back years, as far back as I could go, and I was just started like 10 years ago, and I just started. And it's like, I was telling you the other day, it's like building boxes, man. Make another box, make another box, make a mountain of boxes. You just get your mind stuck in them, and then you just start marking them out. And then I discovered how I could build a bot that could go back in time and mark all these highs and lows. So I built this bot that went back in time, as far back in the charts as they would go, and I would mark every one of these turning points. Then it would bring it back, and I'd put it in a spreadsheet. I'd have to hand type it in on a spreadsheet. And then I'd use an AI tool to give me an analysis of if you use an Excel spreadsheet, you can actually make pie charts and graphs, and it gives you a graph of all the times that give you the most accurate levels. And then I did that and went, I wonder if that works if it's a fractal thing. If this is truly an algorithmic thing, does it work on all time frames? So then I went to different time frames and tested it. Got it. Then I went and tested it on different asset classes and was like, holy smokes, I've got it. Tibbs, my gift to the world. My gift to you folks, right there. That's Tibbs. And I've just shown you it works on a 1 second chart. I'll show you it works on a 1 day chart. And then You take TIBS, and I'm going to give you a secret today. How many people are in here? 41 of you are about to get a good secret about TIBS. You ready? TIBS works with seasonal tendencies. Think about it. Think about it. Go to your daily chart. Go to your monthly chart and use TIBS. I've showed it to you on a 1 second chart. Go to a 1 month chart and see what happens. You have to use TIBS in a different way on a monthly chart. But if you just use the first 12 to 24, like first 1 to 2 years, it's a thing of beauty. That's why you'll wonder why July is the 7th month and it turns in August. You can get an August, July, August low, and then a 9-10 turn, which is September, October turn. October makes the low of the year, right? All the way up into a 12. 12 makes a reversal into January. Try it. You wonder why May is always the turn point? So you have March, May, 3-5 split, or a 2-4. I tell you, check it out. It works all the way up into here. 42 of you have an interesting, yeah, Mark's like, let me check into that. Do it. And if Tristan's listening, if you take TIBS and make me a 1 hour, that TIBS is transferable to any time frame that I'm on. It automatically switches over to whatever time frame I'm on. TIBS will tell you what month, what day, what week you're expecting a reversal on. Now you take TIBS and use it on a weekly. Let's say you hit a 5 or a 9, the 9th week of the year, right? And then it reverses on the 9-10 week and you start to see a run. And you catch it from 9-10 into 12. You got 2 weeks of straight downward running. Now you can start to see how swing trades can last for 2 weeks. You put your trade on and you catch that turn on a 1-day basis or an hourly basis at the top of that week that you're expecting to turn. And you catch that on a day reversal and you say, this should settle in for the next 2 weeks. We should get downward run. Now you're using TIBS as a super powerful long-term tool. You guys are seeing it on a 1-minute chart. Imagine now using that on a daily chart. And 41 of you just got yourself gold and you don't even know it. But anyway, that's awesome, D. Off-track topic. I wonder how much support you had with family while you were spending years on charts. It's lucky to have a supporting partner too. I would obsess over this stuff. I had a couple of guys I used to do this with, Richard and Steve, and they were with me from the beginning, and we used to meet up every Sunday, and I used to make my bots. I was learning how to try to do bots, and we would talk for hours about where the market was going and what it was doing on Sundays. So I had a couple of people, and I'm a people person. I love to be around people, and I love to share stuff. I love to teach stuff. I love to be around a crowd of people. And these guys really helped me vet. Like when I had stuff coming out of my head, I had ideas flowing like crazy. And it was nice to have people to give those ideas to and to share those ideas. And they'll be like, oh man, that's amazing. Give it a go. And be like, yeah. I said, look, you guys, I came up with this over the last 3 days. I'd be obsessing over something. And they'd be like, shit, that's amazing. And then we'd play with it some more and play with it some more. And then they left. For some reason, they left. And I still to this day don't know why they left. I was sharing everything. I was giving my bots to them, and it's crazy. I didn't give my code to them. I gave them the bots. Every bot I was coming up with bots that would change. I even got to the point where I would look at every one of these candle combinations. I had every candle combination high or low, and I had a bot that literally goes bull, bull, bear, bear, bull, 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 bear, 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 bull, bear. I had every one of the combinations. I think there's like 16 combinations that you could get. And I had a bot that would look at every one of those candles, every one of those combinations, and it would tell you only if you had a bear, bear, bull, and the last bull candle was a high. I even had all of these marked out. You talk about obsession and stuff, and thousands of hours I spent on this stuff. And my wife was working, right? So 12-hour days, 10-hour days, I'd just be in the charts, digging around, and I'd be analyzing every one of these things, looking, and I'd have a bot that would build a wick. It would take that wick, and it would take that wick into consideration. And as soon as this low was taken, or that open was taken and transferred or traded back to, it started to trade down. So it would be like a bull, bull, bear. And if the bear candle dropped below the last bull candle, its close was below the last bull candle, the next candle to trade back into it would take that as a short. That's how I was building bots. I've got so many different bots, so many different ways. But and coding, I was not good at coding at all. I used a chart or a FX Dreamer. It was a bot building program. So it's just like you put pieces down and it writes the code underneath it. So I wasn't a code guy by any stretch. Anyway, I digress. Whilst we're in this, I'm on my little rants. Good stuff today. Gonna take a break and do some walking on the treadmill for a bit. Have a great day all. See you later, Derek. I've got to go myself. I got to get myself a little exercise in here. Captain, a lot of hearts to you, my friend. Right back at you. Oh, there you go. Sending some love, my brother. This bigger down closed candle. 1105. Is this a bullish order block? It means threshold is holding price. Do you agree? Yes. See how it's holding price? It's a bearish candle, but it's a bullish breaker. Not the bull candle, the bear candle is the one we're looking at. See how it's holding price? So now you want to start saying, where's the next bullish breaker, bearish breaker? These two up close candles or three up close candles make a bearish breaker that takes out this low and this low. So now you're between this guy and this guy. You see how they're overlapping during lunch hour? Eek. Just then you're saying, which one do I trade to? I'm in equilibrium of this whole range right here now. So now what you got to say is, there's the low or the open of that whole candle. Like this open here. You want to see that one, and you take that high there and you pull, what's the mean threshold of that candle? Those two candles there. So you take your fib tool from here to here, and you go, where's my equilibrium? And yes, I use the bodies only. There's the equilibrium. So that was a good guess. So look for that there. So like to like array, breaker to breaker, mean threshold to mean threshold. So I want to see it come up to there. And see what kind of, just watch and see what kind of reaction you get off of it. So when you're looking at these ranges now and you say, what in here gives me a reversal? This low right here is taken. There's a small little reversal right here, right there. And if we use the formula, See how we went through it? So you wait, comes back up, hits off an old array, a premium array inside the smaller range, then bounces, comes down, hits that reversal, runs up through this level, comes back, and watch, we tap it again from the above this time. See that? You tap it from above. That's precision, man. Precision. And then accelerate into 50% of the whole range. Here to here, there's 50%. So you're into the premium level now. If that's all it is and it reverses and goes back lower, then look for the next price leg down. So then I would take this as a price leg down here. See how Chandra right now, your level's not being supported any further than we did not get through that mean threshold. We're not heading lower yet. You're back into staying on the horse, staying in price action. And this is no different than if this was a one-day chart. That's why you need to understand, you need to practice being in a 1 minute chart. And the moment you can stay on the horse inside a 1 minute chart, this is no different than a 1 hour, 15 minute, 3 minute, whatever damn chart you're on. This is exactly the same damn thing. That's why we're on a 1 minute chart. And that's why we're practicing on a 1 minute chart, so that you guys can see this on a 1 month chart. It's fractal. It's algorithmic. Get that in your head. It's algorithmic. If you don't buy into the algorithm, don't waste your time here, because that's all we believe here. That's all we believe here. We're a fully drink the Kool-Aid kind of ICT people here. So watch that mean threshold. Like to like. Like to like. Now I expect to see it hit that and see if we get a reaction off of it. If we drive right through it, I start to go, I like the idea of running for these highs now. The next objective I'm looking for is discount array, larger range. Where's my premium array? Quick. What candle's my premium array? Bang. There's the 50%. Quick. Give me my premium array. What is it? Anyone? Anyone? Premium box right there. Bingo. Box to box. Like to like. We already hit through that. So if we accelerate through there, I'm looking for up here. If we start getting through the premium array, now I'm looking for a support on this. Rejection block, old high, 50%, old high. Stay on the PD arrays. Don't overshoot your PD arrays. That's what Peter was just talking about, saying my objective was too high. Stay on what's the next PD array I could reach for. So that 50% ran right through it. Really exciting. Look at that. Look at that. That does it again, right on the freaking money. The bodies respect that. If that's not precision, man, I don't know how to make things more happy for you guys, more precise. So now I want to see it just rip right through that, keep going, keep climbing higher and close above that. If it doesn't, if it comes back into the range, you got to start saying to yourself, what's 50% of the range? Where's the reversal? Where's the fail safe? If you don't understand fail safes, please look at my video on fail safes and study them. Develop a fail safe, and you'll develop a fail safe around your understanding of price action. You'll know that it fails for you here if it breaks this freaking point right there. If it breaks it, then that's my fail safe. I know I'm on the wrong side of this. Price is reversed. So if you're on the wrong side of it and you've just paid for this new piece of information, you just say, look at it as, I didn't take a loss. I just paid for some new information. I got some new information. Now I'm back in sync with the market. I'm back on the horse. It just threw me off. I get back on the horse because now I know where the horse is going. It wants to go to the water. It wants to go to the carrot. It likes carrots. Right? Right now, I want to see it close above that before I put my carrot out there. But ideally, you want to see it come for here. If you're putting this as your short, your stop loss is sitting there. See how you're getting squeezed? Your stop loss hasn't been hit. Wait to see where that closes. Remember yesterday when I was talking about this and we're like practicing on the weekends? How many of you guys were practicing this on the weekends where you take that and you go, what's my decision? That candle ends. What's my decision? Next candle. That candle ends. What's my decision? I want to see it go higher. Goes higher. So what's that decision? Make your decision from that point. See what I'm saying? Wait for the candle to finish and make its decision. Don't decide while it's making the mess. 27 candle. Now you start to use TIBs to your advantage. What happened to the bot? Oh, it's on that MT5. I couldn't build bots on this because I don't know Pine script. There's no people out there that build a Pine script like FX Streama. He has, it's specific to MT5, MT4. And nobody likes MT4 anymore, but MT5 is for other brokers, for specific brokerages and stuff. So I don't know Pine script, so hence the reason my bots are not, I'm not using bots here. But I don't need a bot. I can see it. I can see it way clearer now. We used to try and put the bot on and the bot would trade while we're gone. Like you put it on during the morning and leave it. But I could never just leave it. So I was always dicking around with my bots. My bots never panned out, never made a lot of money. I had one bot that was making thousands and thousands of dollars. Then it would go. I was literally trading trends. I had bots that were building trends, and it would just keep dropping trades every minute, and just keep putting a new trade on. So when it actually dropped below the overall threshold, every one of these trades were making oodles of money. Then when it went back through it, your profit would just go slam. I made lots of crazy. I made bots that did trend lines. See how that held? See, the body did not break that high. That's why you wait before you make your decision. Reverse, body trades below it right here. You're back inside the range. Cam model 1. Displacement, you come back, you hit the high of it right here, you continue higher. That's a cam model entry right there. Right there with precision off the top. Displace, come back, tap it, go. Reverse, drop below it. You don't get a chance to get in on it. You're back inside the cam model for another cam model 1. Look at that 1 second chart again. Look at that area of sensitivity on that 1 second chart. Looking for this discount array, box to box now. Watch down here. Right there. I'll get rid of the 1 second one now. Now you want to see, does it get through here on a close? Now look for a range extension. If this closes, wait for the candle to finish before you make your decision. This could be just this, like to like, and reverse and come all the way back up again. So wait for it to close before you make your decision. While love your obsession and continuous work till you found boxing way. Thanks for sharing unconditionally. No conditions, man. Bring your friends. That's all I say. Let's teach everybody. Let's get as many people in here as we can to learn this stuff. There's too many mentors out there, too many people trying to rip people off, sell them shit. Like, I get it. I get there's people that don't want to do the work. I get there's people that just want it handed to them. Those are the people you come up there and you start selling them signal services. Sell them this. Sell them a signal service. Because they don't want to do the work. They don't want to obsess over charts. They want people like me to obsess over it so I can give them the answers. And just tell me where to enter, Darren. That's all. Tell me where to put my stop loss. Tell me where to get out. You can sell that because you're not going to get everybody. You want to teach everybody how to fish. You don't want to give them a fish for the day. You want You don't want to feed them for a day. You want to teach them how to feed themselves, feed their families, and accomplish all their dreams and help people. Help people. Help other people, man. Pay it. Pay this forward. That's my thank you. Bouncing off the mean threshold again. Right on it. Your CAM Model 2 entry. 50% of the range right there. Look at how they overlap, hey? Watch to see where it closes. Stop loss will be down here for a CAM 2. Not that you're going to trade this during lunch hour, but just watch. Because we want to see lunch take out those lows, right? So just watch, wait and see. Got 12 seconds left. Look how many times it's hammered into that equilibrium or that mean threshold of that breaker. Crazy. Our breaker strong? Hells yeah. Last up close candle. This breaker, that breaker, it hit it. Came all the way back down again. It's got to run these lows out eventually, right? Thanks, Steve. Thank you for sharing always. My pleasure, Paulette. My pleasure. Wait for it. 32. Now you got into the Crazy Ivan moment. So we could see a Crazy Ivan here. See, we're starting to close below it again. Wait for a Crazy Ivan, retrace, and then the next price leg down. And I think that's going to be it for me. Let me take my coffee. Well, my friends, if you like what we've done today, hit the like button. Bring your friends. Anybody you know is trading, by all means, pop them in. We'll show you how to stay on the horse as long as you can. You'll get better and better at it, staying on the horse. And that's the whole purpose of that, is just so that you guys get better at getting patient and picking your entries and just waiting for your setups. So you've got this stress-free and your head's not getting in the way, greed's not getting in the way. You're just trading algorithmic delivery of price. And then you'll feel all that stress kind of melting away. And you'll feel a certain level of confidence start to come in. And I still haven't got anybody that's given me my, I put a little poll out there yesterday on the Telegram channel. If you guys are interested in an audio hypnosis program, I was going to give you guys a free hypnosis thing. So it just kind of gets your mindset set into get rid of greed, get rid of emotional stress, just focus on calm, relax, focus on your trade entry. And you just kind of listen to it for half hour, whatever length I make it. And it's supposed to get you into a mindset of just calm, relaxed right before you go into the markets. So you're not feeling so pressured to jump in and trade all the time, fear of missing out, all that stuff. It kind of addresses all that. If you're interested, hit the poll, yes or no, or you don't believe in that shit, that's fine by me. I don't care. It's a lot of work to put one together, and I'm willing to do it for free if it helps you guys out, helps you focus, get in that theta wave mindset, which is really what hypnosis is about. You may not buy into it. You may just want to listen to it. Say, like, I don't believe in hypnosis, but I do like the idea of what the information you're sending. Then just listen to the information. Just relax and Convince yourself of what it's telling you. You don't have to do the hypnotic trance. Just read it, listen to it, and go, yeah, yeah, it's an audio book. Whatever. So much for Crazy Ivan, hey? Right back to inversion. See how you trade through it, come back to it, go lower. Take out, extend the range. I expect to see that range extend now the moment you trade below it. You want to see it come back and tap it. It didn't. It didn't. It didn't. It did. Now you want to see it come lower. Take out this low. Not very big, Crazy Ivan, but whatever. That gave us our return back to the low. Okay, that's it for me. Anyway, thanks again for tuning in, you guys. I'll see you bright and early tomorrow morning. It's only the beginning of the week, so don't sweat your trades. If you're taking a loss, move to the sidelines. Don't keep re-engaging in the market. Just wait, and we'll see if we can get something again tomorrow. See if there's something cleaner for us to play with. All right? Anyway, I wish you guys all the best. Have a safe, happy day. Be kind to each other out there. And take care of people less fortunate than yourself. Help somebody else out today. Kindness is not about just money. It's just about being kind to each other. So anyway, I'm off to my eye appointment. I will see you guys bright and early tomorrow. Thanks again for tuning in. The poll is actually on the Telegram channel. You'll have to find it in there. It's under the general section. And it's unfortunately it's way up there now. You'll have to use the bar to scroll it. I should have put the poll under something different here. It's way back in there. I can't remember the time I put it in there now. 8 a.m. It's way before that. I went on a different day. Oh, that's a long time ago. I just went back too far. Sorry, I'm obsessing over it. Now I have to find it. Sorry. Hang on. Holy smokes. I have to go back too far. Oh, geez. We're on Patience by Hadi. I went back way too far. Oh, there it is. February 2nd at 11:40 a.m. It's February 2nd, so yesterday. Yeah, yesterday I posted that something there, and so far nobody's even given me a vote in there at all. So it's February 2nd. Looking there, it seems like people aren't interested. That's fine. It saves me a lot of work. Thanks, D. Thanks for sharing. You're welcome. Hadi, thank you, Darren. You're welcome. Thank you, Captain. You're welcome. Yes, please, Paulette. We're in the chart. We're in the chat, so the second. Russell, see, where's the poll? It's in there. Much love, D. February 2nd at 1:40 p.m. Paulette, there. That's where the poll is, February 2nd, 1:40 p.m. on your son. Yeah, it's like 11 something on mine. It'll be 1:40 on yours. Just voted. I said yes. Awesome. Okay, so anyway, that's it for me. Hit the like, subscribe. Love you guys. Hit the ring the little bell there, and we'll notify you when we're on again bright and early tomorrow at 9 o'clock New York time. Thank you very much for tuning in. I will see you guys then. Much love, respect, peace out, people. I'm sending you some love. Here's some love, and I'm out of here.